in Germany is anticipated, and this very much to do with the SAP numbers. So there were some positives, at least at the top line. The red headline looked fairly positive on SAP, but under the hood, not a positive story, and DAX futures are expected, DAX trading expected to reflect that. So elsewhere, we might see a little bit more resilience coming through. So this is the start of the European trading day. You can see in the FX column, we've got the pound stronger, as mentioned, the euro a little stronger. The dollar is down by 0.1% as we head into Friday's trade. The start of European equity trading then comes through with the Spanish market and the FTSE 100. Both of those open now, open very fractionally to the upside. We've got politics unfolding here in the UK overnight and over in Spain on Sunday. But those results from Spain, we'll go through those on Monday for you, of course. The French market opening and up by 0.1%, waiting for the German market basically to open, but it is often one of the later markets to reveal its hand, so we'll wait for that. Interesting to watch what's going on in treasuries then, with those yields coming down once again as if we've reinstated the post-CPI moves in bond markets. We'll see how much weakness we can expect from here. Let's have a quick look at sectors then across the European equity markets. This is what the sector breakdown looks like right now. We have technology down by 1.1%. No surprise there then. Is it to do with the Dutch market and ASML? We've certainly seen that downgraded by one of the analyst houses, and that's in the aftermath of weakness in ASML's share price yesterday after those TSMC numbers. So there's that effect. There's also the SAP effect. We're looking for both of those big names to weigh on the technology space, waiting for the German market overall to open. I can tell you that ASML is down by 2.4%, so there is that effect, and still waiting for the SAP share price to open. To the upside, though, energy is stronger, up by 0.8%. That's the best performing sector this morning, and so perhaps that flatters London a little bit, where we see the FTSE 100 up by 0.2%. Sam Unstead joins us from our Markets Today blog to assess where we are on these markets and think about wider themes. In terms of market sentiment then, there seems to be quite a bit going on as we go towards the end of the week. We had the Nasdaq stronger yesterday, of course. The Nasdaq sell-off yesterday, of course, on the back of the weakness in the reporting there, but also a higher yield story in the US, weighing on tech names. And we take that tech theme into Germany today with weakness from SAP. It looks a little fragile on that front.
It does look a little fragile, although I think what's interesting with the SAP story today is something you're seeing across a lot of earnings reports so far, which is that anything even remotely negative is being punished quite hard. And so SAP, I think as Joe mentioned earlier, they had given some guidance from their cloud business. They've slightly missed that guidance today. That was, they're being now punished for that lack of clarity in that guidance a couple of months ago. But actually in the last couple of days, we saw with like Electrolux yesterday, for example, you're starting to see that where there are areas of weakness, it's being punished quite a bit, whereas companies that are remaining resilient and actually giving relatively good reports are not really being rewarded quite as much.
Yeah, interesting sector exposure, isn't there, in those two names? So SAP, they're exposed to the sort of corporate IT spending budgets, and maybe they're being slashed.
That's right.
On the consumer appliance side, they're vulnerable to the housing markets in various parts of Europe, and if we're seeing weakness there, that can have an impact. Let's go to the UK story then, Sam, because I know that's what the blog spends a lot of time thinking about. UK retail sales jumping more than expected, but I mean, this is a volume measure, isn't it, in terms of retail sales? So where we see resilience, it might just be that people sort of hold their noses and pay higher prices.
Yeah, I think that's exactly right, and I think what you're seeing, it's very mixed. Like when you look across all of the numbers, weather, as always, plays an enormous role in the UK, and whether people go out. And this time they were going out to department stores, possibly just to use the air conditioning. but then you also saw a little bit of a dip in online sales. So those two things kind of going in line with each other, but the volumes remain broadly the same. So it is mostly just higher prices that are raising those sales.
And thinking about the housing market, we've got an interesting story on the rental market. I mean, rental prices are attracting a lot of attention in recent weeks and months, because of the a lack of supply coming into the market, and so therefore prices very high. So London home rental prices hitting a record as demand outstrips supply, so says the headline.
Yeah, I mean, not just London, but across the country. And actually the rise, the really startling rise in this is the rise between 2019, the pre-pandemic times, and now. So across the country, it's about a third higher. So it's an enormous increase. And I think this is going to become not just a big issue for consumers, but a big issue politically as well as we go through the rest of the year, because obviously you have the mortgage story, but that mortgage story is then feeding into rental prices too.
Yes, and if you're feeling the pressure in terms of going to the supermarket and things cost more, and then you're looking at rental prices and they're really elevated versus pre-pandemic levels as you described, then it's no surprise perhaps that consumer confidence has taken a bit of a hit, and that's another one of the data points we've got this morning.
Yeah, and I think the mortgage story is very significant in there. I think also, you know, this is a sentiment index, and so we have had the last month or so, particularly with mortgage rates going up, there has just been a pretty bad feeling, if you like, across the UK about how the economic prospects of the country are moving, and in particular how people's personal finances are moving, and that in that GfK report today is very much the kind of key area of weakness.
Yeah, so interesting to focus on that from the GfK. What about the politics and how that weighs in? I mean, it's not very, you can't really see the results of 3 by-elections moving UK assets, but what does it tell us about how the UK is thinking?
Yeah, certainly no near-term, no reaction today really from those. But what is interesting, we had a story out today saying that they're looking at November, that there's a sort of favour towards November next year for a general election. That's the key element. You know, when is that political risk going to start to come? And then in between that, in that interim period, what kind of policies start to come out? So do you start to see some policies, particularly around the housing market, possibly the rental market, and that could start to really feed into markets?
You know, they used to be thinking, Sam, that you did these elections in the spring because people feel more positive and, you know, cross your fingers and hope for decent weather. That doesn't always play out, of course, but that was at least the optimistic view. Now we see, and I can understand why they delay it, but now we're heading towards an election in November 2024. I mean, who feels good in November?
Well, I think you're still, the analogy still holds true, but you just take out the weather, right? So they are still very much crossing their fingers that over the course of the next sort of 15, 16 months, the inflation picture, you know, the inflation report we just had this week, which was good, but you've heard a lot of people saying this is one report, you know, let's wait and see what happens over the course of the rest of the year. They're hoping that that continues, things get brighter, and by the time they get around to November next year, they have something to shout about.
Okay, so they're just hoping more and more time will be helpful. Sam, thank you very much. Thanks for joining us. Sam Unstead from the Markets Today blog. You can get more from the team on the front page of the Bloomberg UK website. Click through to find the Markets Today blog, or you can type TLIV, go on the Bloomberg terminal. That'll take you to the blog page as well. Let's get a check on some of the individual movers. Joe Easton is back with a rundown of those movers that he went through earlier. Joe.
So SAP, Anna, is the big decliner over in Germany, as expected, down around 5% following that weakness in their cloud business, and that's really countering some of the strength in the traditional enterprise software. So as I say, that's the worst performer on the DAX today. We've also got Glencore up on the screen. They've got a bit of earnings guidance out today. Some concern around whether that will now be lower than the full year forecast that they gave a few months ago. A lot of weakness perhaps in the China business. The trading arm of that company still doing pretty well. Meanwhile, Danske Bank underperforming in terms of against its Nordic peers in terms of the banks that reported earlier in the week. Net interest income pretty strong, but they do have a bit of an impairment related to the property industry over in the Nordic region. Lonza as well, that one just opening right now, down 7%. That one hits on the weakness in their biologics department, and that's coming ahead of a big week for pharmaceutical companies next week in terms of earnings. Going to flip through and have a look at a couple of other firms. SBB is one of them that caught my eye. They're doing a deal to raise around $200 million with Morgan Stanley. That's according to a Bloomberg report. That's obviously the big Swedish real estate company that's been hit hard by rising interest rates. Meanwhile, Thales, the defense company over in France, that one looked pretty strong, but the margins perhaps is where the weakness coming through. They are getting good orders following the outbreak of the war in Ukraine, but perhaps a focus on the profit there. Meanwhile, Ubisoft, the games maker, this one, the maker of Just Dance, of course, my favourite game, that one getting a boost with some stronger bookings at the French-listed company, so helping the tech space, countering some of that weakness in SAP. Meanwhile, GAM, we've just got breaking news headlines. I think you flashed that up earlier. Lion Trust won't increase their offer for the Swiss financial investment managers, so that one coming down. There is another bid from Xavier Niel, the French billionaire. Looks like he's the only one coming in for that company, so we're giving up some gains there. Finally, a few broker moves, as usual, that we have our eyes on. There's a note on the car space. We've got an upgrade, I believe, for Mercedes, and a downgrade for another car maker, Volvo. Volvo actually up around 4%. I think they've actually got an upgrade and a downgrade on the terminal today. So it looks like the upgrade is what's driving that stock higher. Hargreaves Lansdown reported earnings only a few days ago. They've got a double upgrade today at Jefferies, which cites the benefit of rising interest rates. This company, like banks, has a lot of cash on the books, which is held with the Bank of England, getting a higher rate on that, of course. Babcock yesterday, this is a defence company as well in the UK, soared around 10%, the biggest gain in 2 years, strength in some of the ships that they're building for the Ministry of Defence here in the UK, and rising again today. They've got an upgrade as well. Analysts at Citi reacting to that report, pushing that one higher in the UK today. Plenty of green ones on the screen this morning, Anna.
Yeah, Volvo getting that raise from BNP Exane, and BNP actually changing its thinking on a number of auto players. And interesting to see Volvo Cars then bouncing back from the losses of yesterday, which were triggered by their own numbers, and of course the moves over at Tesla, or the results out of Tesla. Joe, thank you very much. Joe Easton from our equities team. More from Joe a little bit later on in the programme. He'll be back to take us through the state of the markets in around 20 minutes' time. Let's have a look at what we're watching out for today, 11:30 a.m. UK time. We'll get that latest interest rate decision from the Bank of Russia. Economists surveyed by Bloomberg expect a 50 basis point hike to 8%. Before the US market open, American Express will report earnings for the second quarter. The company is expected to make a return to earnings growth after 2 consecutive quarters of declines. So not a heavy reporting schedule today, but certainly that one will be in focus. And last but not least, 2 big movies, 2 big films out in the UK and the US today. I think they're out in Europe already. Barbie and Oppenheimer released today. Cinemas will be hoping for a boost to sluggish revenues from the highly anticipated releases. So whether it's Barbie or Oppenheimer or Barbieheimer, you know, doing the double, you know, enjoy. Or if you just want to watch the Women's World Cup, enjoy that as well. So let's talk about the markets then. Coming up on the programme, what does the fall in US jobless claims mean for the Fed? And is September's meeting now in play? More on that shortly. This is Bloomberg.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
The names that move markets are on Bloomberg.
China has seen slower growth than they expected. Many countries do depend on strong Chinese growth to promote growth in their own economies. For the United States, growth is slowed, but our labor market continues to be quite strong. I don't expect a recession. I think we're in a good path.
Nobody covers business like Bloomberg, your global business authority.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, China Open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. season is here.
Decent start to earnings season.
We are heading into the meat of earnings season.
Bloomberg breaks the numbers first.
We have Bank America, we have Charles Schwab.
Tesla, Netflix, you name it.
They're heading in the right direction.
A record quarter of revenue.
With exclusive expert analysis.
What do they have to deliver to justify the rally we have seen?
Earnings are still going to be under pressure.
Is there a divergence that's really important to draw here?
The massive divide between Diamond and Fraser.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
This is Markets Today. We are 14 minutes into your European trading day, and things looking pretty flat everywhere apart from Germany. So the Xetra DAX under pressure, the SAP's share price heavily weighted, of course, and that is trading negatively. So that particular market down by 0.5%. Let's return to the themes that dominated trade stateside, though. Initial jobless claims in the United States have fallen to their lowest level in 2 months. A robust job market is key to healthy consumer spending, but it puts investors' focus back on the Fed's rate path. Joining us now, Karim Chedid, BlackRock's head of investment strategy for iShares EMEA. Very nice to have you with us, Karim. Happy Friday. Thank you for joining us. So I guess the question for markets after we've had, yes, CPI, but then jobs, by which I mean the jobless claims data. What does this mean for September for the Fed? If we think we know what's happening next week, what do we know about September?
It's definitely still a live meeting. You know, if you look at the market pricing, we do have some pricing of, some probability of a second 25 basis point hike. Really, I think it's going to be data dependent over the summer. On the one hand, this inflation is here, but we do have some indicators within even that drop in CPI or drop versus expectations in CPI. We still have components that are pointing to potential re-acceleration later this year, especially if you consider base effects versus last year. So I don't think we can call this inflation as just a one-way street yet.
Okay, and you think the Fed will respond pretty aggressively if we see a resurgence then in inflation?
I think the Fed is still set on making sure that the inflation theme is under control. They really want to be, they're really set on making sure that inflation expectations remain anchored. And I think it's too early to call the victory.
Okay, where does this leave stocks then? Because we've seen tech stocks clearly respond to Fed rate expectations, but they also really respond to the earnings stories.
Yep.
And both of those seem to have been moving in the wrong direction in the last 24 hours or so. What do you make of the tech theme at the moment?
Yeah, I mean, the past 48 hours, even the past 2 weeks have been so interesting for the US equity markets because we've had this theme of the concentrated rally, the Magnificent Seven, but then you look at the past couple of weeks and actually the market has started to broaden out. And I think there are a couple of key indicators over the next few days on that. We've got the NASDAQ rebalance, which was triggered because of the concentrated rally. It's an ad hoc rebound. And we've got a lot of interest, with investors I speak with in benchmarks such as S&P equal weight because of this positioning for less of that concentration.
Okay, I mean, how does it matter, breadth? Does it really matter? Because a lot of people will talk about how they want to be more convinced about the rally by seeing more breadth and not having it just within the sort of Magnificent Seven. But then others, and I've seen some research from some colleagues on the Markets Live blog that suggests maybe breadth isn't all it's cracked up to be, and you don't always need breadth. Sometimes it is very sector focused. How do you view that?
Yeah, and we're trying to square the two. I mean, we've talked a lot in our mid-year outlook about the mega forces that we focus on, and AI is one of them. And to your point, breadth is not everything we look for, because if you've got a driver such as AI, which we believe has further legs to go, then you could still see these stocks, just because it's been concentrated, they're still good quality stocks, they have good balance sheet fundamentals. It can still be legitimate. It can still be legitimate. The fundamentals are there. But at the same time, the fact that we're seeing a lot of interest in exposures that position for breadth, like the equal weight benchmarks, means that a lot of investors are starting to get a little worried. Even if the fundamentals are there, maybe the technicals got a little bit too stretched.
Right.
And so that's how you square the two. On a tactical, technical level, you could believe that it's gone a bit too far and you position for some breadth. even if you fundamentally continue to believe in it.
Okay, really interesting. And tie that into then this NASDAQ rebalancing and prepare us, Karim, for Monday and what we might see there, because some investors that have to reflect the index might be forced, if that's the right word, to sell some of those heavily weighted tech names.
Yeah, I mean, we know that the index rules have triggered this ad hoc rebal because of the concentration of the rally. It's effective as of tonight's close, so I think also the futures and options expiry we have today, which often gets called the triple witching, is super interesting because of the rebal happening as well. So this afternoon's price action when the US opens, I'll be following that on a tactical level. But what we do know is, we have to see that rebound from the aggregate weighting of the top stocks that form individual weights of more than 4.5%. Their aggregate weight is now at 48%, and it has to come down to 40 per the index rules. So that will mean that some of that concentrated names will see some action.
So there could be some vulnerability there. What about the preparations for earnings season? I mean, we're in it now. We've seen a lot of banks reporting, a lot of corporate stateside, of course, big names in the tech space, but we're still kind of just getting started in Europe. We've still got a lot more to come in the week or two ahead. Do you think expectation is in the right place as far as earnings, or are we too optimistic?
So, I mean, we always get kicked off with the US financials. We've seen the numbers on aggregate. They're a little bit better than expected. Europe, next 2 weeks. I think Europe expectations are a bit more positive than the US. If you look at the full year of earnings expectations, Europe is still mildly positive, even if the US is flat, even if Q2 looks negative. And the big question that everyone's asking is, will Q2 earnings form the bottom for earnings? I think for the full year, if you zoom out, expectations are still too positive. We still see pain from earnings because equity earnings are not priced for a recession yet. And our base case is still a recession in the US and in Europe. And given expectations in Europe are more positive, then the disappointment could still be a little bit bigger.
Okay, so if you expect recession, maybe we're expecting too much from earnings. Thank you very much, Karim. Thanks for joining us. Karim Chedid, BlackRock's Head of Investment Strategy for iShares EMEA. Coming up on the program, we'll get back to one of the corporates on the move today. SAP slumps as second quarter cloud sales missed estimates. We'll discuss the headwinds for the software sector. That's next, and this is Bloomberg.
What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. And what's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
Studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
This is Markets Today, 23 minutes into a European trading session that actually sentiment seems to be worsening in. We look fairly resilient, but the German equity market was always expected to go lower, and it has done. The SAP story is key to that, so the German DAX down by 0.5%. Now, shares of SAP are trading sharply lower in Germany this morning. Europe's largest software provider missed on the second quarter sales in its cloud unit yesterday. Sales in constant currencies at the division, which is the German firm's largest, rose 22% from a year earlier, slightly less, though, than analysts had expected. Let's get some analysis of this story. Joining us now, Bloomberg's Berlin-based tech reporter, Aggie Cantrell, can take us through the earnings. And Aggie, what are the key takeaways from this? Because we focused there on the cloud story, even though one of the red headlines on the numbers suggested that the company is lifting its full-year operating profit outlook. But that message didn't seem to cut through.
Yeah, so they are lifting their full-year operating profit outlook for the whole business, for the revenue that is on-premise and in the cloud. But what is key and what we're seeing reflected in the share price at the moment is what is happening with the cloud units. SAP has made this huge pivot towards the cloud. It's trying to get as many customers as possible to commit to the cloud as opposed to on-premise solutions. And it seems like at the moment they have also reduced their potential outlook for the cloud. They've reduced the top line for that for the year. So that is also a concern for a company that has set this as very much their strategy. The reduction was not significant, 200 million, but that is something which has been reflected in how it's being traded today. And also the thing that was interesting there was two things that Christian Klein said on a call with reporters. The first one was that he said yesterday evening that there was economic pressure that means that some of the deals are slipping into the second half of this year. They're not lost, he stressed, they're just slipping into the second half of this year. And also one that I found particularly interesting was that some big public sector clients are opting for on-premise solutions due to geopolitical risk. He does, however, say that these big public sector clients are committed to the cloud long term, but at the moment they want their data on-premise.
That's really interesting, isn't it, where the geopolitics meets that tech trend. Now, should other software providers be concerned by some of the themes you're mentioning here, Aggie?
I think they should be concerned to a certain extent because this is also a thing across the industry. The software spend, the IT spend is a harbinger for a lot of enterprise customers that might be looking to tighten their belts. And also we've seen a lot of companies cut jobs in the last couple of quarters, and that means that some of the deals with these software companies have meant that there were fewer paid users from the enterprise side because they have fewer employees now. And so we saw that, for instance, in a report that came out among US software providers earlier this week, there was a 51% drop compared to the same time in the second quarter last year of software spend among US.
Aggie, thanks so much. Thanks for the update. Bloomberg's Aggie Cantrell with everything you need to take away from those SAP numbers. Coming up from US to European banks earnings season next week, we'll get you ready for the week ahead. We'll discuss the banking sector. This is Bloomberg.
Half of all American women in opposite-sex relationships now make the same or more than their husband. That's a record high. According to a new report by the Pew Research Center, a third of U.S. women are in egalitarian marriages, making roughly the same as their husbands, and another 15% of them are the breadwinners. Women with college degrees and no children, as well as Black women, are even more likely to make more or the same as their partners. But not everything is a bed of roses. Working wives still carry most of the weight of unpaid labor. Women in egalitarian marriages spend almost twice as much time taking care of the home or a loved one, while dedicating less time to leisure.
Women are continuing to go out in the formal labor market and contribute and are still bearing all of the load of responsibility that disproportionately falls on them in terms of family care.
During the pandemic, in the wake of school shutdowns, the height of the childcare crisis pushed nearly half of American women out of the labor force, a trend that's yet to be reversed.
Women are just really struggling to meet the care needs of their family, and at the same time are really, really leaning into the labor market. And I don't think we've seen this before in history, to be honest.
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Welcome back. This is Markets Today, 30 minutes into your European trading day. Let's get your top headlines. European stocks and US futures struggle for direction after fresh signs that demand for workers in the US remains resilient. Treasury yields pair yesterday's gains. A setback for Sunak. UK Prime Minister Rishi Sunak suffers a double defeat, losing 2 Conservative seats in special elections. The pound gains, though, on stronger than expected retail sales. Plus, SAP slumps as Europe's largest software company disappoints on cloud sales. Welcome back to the program, everybody. We were just getting that analysis on the SAP story. Really interesting insights from SAP around propensity to spend by corporate IT departments, but also government agencies and the battles with on-premise versus cloud. So that's a really interesting story, and it is having an overall impact on markets because the downdraft from SAP is weighing on the Xetra DAX today. We see the DAX down by 0.4%. We see the FTSE more resilient, just up 0.1%, and the CAC 40 even more so, up by 0.2%. The Vivendi story, the media story is important. Media is the best performing sector actually this morning. So we actually look quite risk on when you look at the individual sectors. Around 2/3 of sectors moving higher. Media is at the top of the list. Yes, insurance also there, and utilities not far behind along with energy. But that's what we see as the best performing sector in media. Basic resources, the worst. Technology also under pressure. We've got the SAP story. We're also watching ASML as that stock has been weaker, continues to be so after yesterday's losses on the back of TSMC. And also a downgrade for ASML. More on the individual stock movers, though. Let's get to Joe Easton from our equities team, who can take us through the winners and losers of the morning. Joe.
So we'll dig a bit deeper into these early morning movers. So Wärtsilä over in Helsinki. This company does marine life sciences and also engineering. So they supply into submarines and to the shipping sector, according to their website. Meanwhile, Schindler, this is an engineering firm in Switzerland. They do steel engineering, lifts, escalators, that kind of thing. That one jumping 6% after some pretty strong earnings from that company this morning. And that comes yesterday after we had a report from Cone, the big rival in Helsinki, which sent the stock lower. So perhaps people were expecting some weakness there. Meanwhile, Ubisoft over in France, the video game maker, Assassin's Creed, that's their big title, reporting some really strong bookings. And there is a lot of uncertainty around the video game space at the moment due to the economic climate, but that looks to be holding up pretty well, and that stock rising around 4%. Meanwhile, Volvo Cars, you mentioned earlier that double upgrade over at Exane BNP Paribas. They go outperform on the stock. This is after it dropped yesterday following some disappointment around their electric vehicle business, but that is pretty much making up all of those declines this morning and is gaining over in Stockholm. Now, in terms of the losers, we've covered SAP. We know that one is dropping around 4% at the moment. So we're going to look at a few others. Dassault Aviation. This one is in defense. We had Thales earlier. We've also got Dassault, but they've also got a private jet business as well. PJs, if you're a fan of Succession, of course. So that is where the weakness is, the private jet business slowing down. What does that say about the luxury space Also, Lonza in pharmaceuticals, a profit warning there. This is life sciences. This is coming ahead of a big raft of healthcare reports coming up next week. Astra, GSK, lots of those companies. That one getting hit today. Meanwhile, SSAB, this is a steel company. This is over in Stockholm as well. The worst performing stock on the Stock 600 today, down 12%. They've got some weak orders. They say that some of their end markets are softening again because of concerns around demand as the cost of living crisis really hits. Finally, I've brought up Electrolux because this has been an absolutely disastrous week. This one fell 23% yesterday, the biggest ever drop, as they see a slowdown in things like dishwashers, fridges, all those white goods. That's really been hit hard, and it's down again 3%. I thought it might come back up, pare some of those losses, but investors really worried about that one, and that's having the worst week in its history on the public market.
Joe, thank you very much. Joe Easton from the equities team with an update on the winners and losers. I can tell you there's something else that is losing ground today. That is the yen. We've just got some news lines coming through from the BOJ. There's a few lines in there, but the most important one, highlighted as a red headline across the Bloomberg terminal, the BOJ is said to see little need to act on yield curve control for now. So says the headline. There's a lot more in here as well. They're still likely to discuss yield curve control changes, even if there is no tweak. They see no major issue in bond market functionality. And of course, yield curve control is all about controlling yields at the 10-year part of the BOJ's curve, or the Japanese government debt curve, sorry. They'll reach a final decision after viewing the latest data. So there is still some optionality in all of this. But this is according to Bloomberg sources then. The BOJ is said to see little need to act on yield curve control for now. We have a BOJ meeting taking place next week. And there had been some building expectation. And we'd seen that in the shape of some strengthening of the yen. Well, now the yen weakens as maybe the market resigns itself to the fact they'll have to wait a little bit longer to see the BOJ step away from its ultra-loose monetary policy. So that's the BOJ story. We've got plenty more of that for you next week. Lots more macro happening next week. But in terms of the micro, we continue with the earnings reports. After more than a year in the deal-making winter, Wall Street giants are finally seeing signs of life in their capital markets divisions. Bank of America, Morgan Stanley, JP Morgan and Citigroup all beat forecasts for equity underwriting revenue in the second quarter. Next week, the focus shifts to Europe with a host of lenders reporting. Deutsche Bank, Santander, UniCredit, they all report, and they kick off the earnings season for European banks on Wednesday. Let's talk now to Anke Reingen, who joins us, Managing Director for European Banks Research at RBC. Anke, nice to have you with us. So we mentioned there in the headlines some of the resilience we've seen in investment banking in the US. Certainly that was evident in some of the earlier reports, if not the later ones. What did you take away from that? Anything of interest when it comes to the European story?
Yeah, so the US obviously reported this week, last week, and we have to probably put this in context. US banks were down 20% going into the numbers. And against this background, the results were quite reassuring. We had net interest income that, for a number of banks, actually beat expectations. A number of banks were actually able to increase their guidance for the year as well. Asset quality was better. And to your point, in terms of investment banking, yeah, the trading probably was as weak as expected, in some cases actually slightly better. And on investment banking, there were some improving trends. I mean, clearly there's a low base, especially ECM and DCM, but there were some signs. So if you think about the Europeans, some have already started to report in the Scandi area. As you mentioned, large Europe is reporting next week. Yeah. I think the results will be quite reassuring on a number of fronts. It's especially like net interest income. We're later in the rate hiking cycle. Yes. And that will still help Europe with the pass-through rates on the deposits rate not being as high. I think asset quality will be quite benign. And I think probably investment banking trends are being quite similar to what we see for the US. But then it will be all about the outlook comments, because obviously the quarter has ended, what comes next? Yes. And to your point on investment banking, clearly a number of banks, Morgan Stanley highlighted, they're seeing some green shoots. June has been better. I mean, it's all relative versus a low base, and it needs a more secure macro for really the investment banking activity to pick in. And it's interesting, on that more secure macro, we're going to get a lot of macro signals from the banks next week, aren't we, with a lot of interest rate decisions. Yes. So I suppose that adds up to a very busy week. But how does that weigh into the sort of net interest income conversations that you're having about the banking sector? Yeah, I mean, the current expectations is probably like our house as well as another 25 basis points next week, and then another 25. But I think probably it will be very much data dependent. obviously expectations have been rising for net interest income for the bank. So the question will be if there's further incremental upside and upgrades coming through. So that's probably an area that needs to be evaluated based on the macro data. But I think the key thing is as well the PMI that comes out on Monday in UK and Europe. And you can argue the valuations are very cheap, the numbers are reassuring, but we need that positive macro data to really get the stocks re-rating. Okay. So next week will be a very busy week on the earnings, but as well as on the macro updates.
As well. And also, in terms of the link between the two, we cover a lot of, I've seen stories certainly on the UK side about bankruptcies and profit warnings for UK listed businesses, and they do seem to be on the rise, maybe from a low base. But you see, generally, we've seen little sign of deteriorating asset quality then when it comes to the European banking landscape. I guess we're looking for any cracks there. There were some cracks, weren't there, in the US story around the consumer and commercial real estate?
Yeah, I mean, we also have to keep in mind we're coming from a very low level. So the loan loss charges will go out. I think it will go up. It's probably the banks will also release less of provisions. So there will be a step up. But I think, to your point, unemployment is still very low. Bankruptcies are very low. So I think that there will be smaller cases and the provisions will build up. But also, coming out of the crisis, the banks have built large buffers. So I think that for the time being, it's clearly the impact will be limited. But to your point, there's lots of uncertainty. And the market needs that more certainty for an improving economic environment to really give the stocks the credit that this is the point.
Right, because European banks do seem to not be doing very well compared to their book value. I mean, does anything change that for you, Anke?
I mean, it's interesting. They're trading at larger discounts than in the past, yet the return expectations are actually higher. Because if you think back, we had like negative rates for a very long time, and now the return prospects are higher. And I think that the main question, and the main question is always, what's the catalyst? So how do they re-rate? And I think if you look back in time, it's that positive PMI, the GDP upgrades, that will help the stocks to re-rate.
Okay, Anke, thank you so much. Thanks for joining us. Good to get a briefing ahead of next week. It's going to be a busy one. Anke Reingen, Managing Director for European Banks Research at RBC. Just recap of what we've heard from the Bank of Japan. The BOJ said to see little need to act on yield curve control for now. That's the red headline that crossed the Bloomberg terminal around 8 minutes ago. And we've seen some fairly consistent weakening of the yen as a result. In terms of bond markets, we've also seen some movement there. The Japanese 10-year bond futures rising after the BOJ yield curve control report. And interesting that in weeks just gone, we've seen conversations around whether the BOJ might tweak its policy, change the focus in terms of the part of the yield curve that it tries to control, maybe switch from 10 to 5. Well, it certainly seems as if there isn't going to be an expectation of tweaks there now, given what we're hearing across from colleagues. So the BOJ said to see little need to act on yield curve control for now, but they're said to still be likely to discuss yield curve control changes, even if no tweak comes. We will have to wait for next week to get the latest. Now, coming up on the programme, we'll get back to European politics. The Spanish Prime Minister, Pedro Sanchez, faces an election challenge from parties on the right. We'll take a closer look at Sunday's vote. That's next. This is Bloomberg.
Race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think that much better than when I was growing up. There's so many people who occupy areas I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress. And somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
This is Markets Today. We are 44 minutes into your European trading session. Underperformance over in Germany, outperformance on the CAC 40, the sector weightings driving that. Some of the industrial, some of the media stocks actually doing well in Paris. Some of the tech names doing less well over in Germany in the DAX, down by 0.5%. Let's go to politics, though. Spaniards will vote this weekend in a snap election called by Prime Minister Pedro Sanchez less than 2 months ago. Sanchez's socialists are facing a challenge from the Conservative People's Party and the far-right Vox. Although Spain's economy is growing faster than most EU countries, a sharp erosion of purchasing power and dwindling consumption remain a concern for voters. Let's get to Federico Santi, senior analyst for Europe at Eurasia Group, and he can give us expertise on the Spanish story. Federico, nice to have you with us. So we've spoken to many people, and the polling seems to suggest some sort of victory on the right of Spanish politics. What are you expecting?
Yeah, that's right. You know, it looks as if the election will be more competitive than it initially appeared. Not that it was ever a shoo-in, to be clear. I think the right-wing opposition led by the Popular Party was always seen as the clear favorite. And to be clear, that remains the case. We're now in the blackout period for polls, so we're flying almost blind, let's say. But the left has recovered some ground, and still it has. I think it has more than a fighting chance at holding on to its majority in parliament.
Okay, you think so. So what kind of percentage chance would you put to the various possible outcomes here?
Well, I mean, roughly speaking, I would say probably about 1/3 probability of a left-wing majority remaining. And, you know, this is really based on the success that Prime Minister Sanchez has had in stoking concerns, if I could say that, of a right-wing takeover, and in particular about the far-right Vox entering government for the first time to really mobilize the left-wing vote. Sanchez triggered elections quite unexpectedly in May, right on the back of what was a very damaging defeat for the governing left-wing coalition at the time, which was rightly seen as a huge gamble. But it seems that it may have paid off, at least in part, as evidenced, as I said, by the recovery in support for the left, and in particular for the Socialist Party that we saw over the last month or two. That said, you know, as of last week, it seemed as if some of that momentum had petered out, or at least eased, again, as we headed into the blackout period. So I still think a right-wing majority is more likely, but again, a more closely contested election than many had initially assumed.
Yeah, that's really interesting, that more recent move and sort of resilience in the left-wing side of things. Tell me more about the right-wing challenge, though, here, Federico, because it seems that Vox, you mentioned as the more right party, could then team up with the PP and form this right-wing coalition government. It's interesting to look at Vox, though, because I understand from some of the polls that Vox could end up with more influence, more power, actually a seat at the table for the first time in decades for the far right in Spain, but at the same time receive a lower vote share than previously. What are your expectations around Vox?
Yeah, that's right. You know, and Vox is a relative newcomer. It's been on the political scene for Spain for about a decade now, and it's represented in a number of local and regional governments. But this will be the first time that they entered the national government. And if indeed the election produces a right-wing majority, I think they will insist on a sort of full coalition agreement where they control several ministries, and they are a bit of an unknown quantity. I think that will introduce a lot of uncertainty in economic policy. I think it has the potential to, you know, increase social tensions in Spain, particularly around civil rights, LGBT rights in particular, migration, also relations with the regions, you know, between the central government and and regions in Spain, which of course is always a very salient issue. On the economy, they will add pressure on the Popular Party on the center right to reduce the tax burden further, so they could add to some of the risk around the fiscal outlook, which are quite limited overall, I would say. But more broadly, in terms of economic policy, Vox has tended to move towards the center, and this has been, a trend all throughout Europe, really. They don't really question, Spain's membership in Europe, into the euro, or, EU economic governance more broadly. So I think the risks are more on the social side, if I may. And more generally, I think, and again, this is also a trend that we're seeing across Europe, particularly as Europe works through its inflation shock. This has tended to benefit the opposition, but more often than not, this has been the center-right, the moderate opposition, as opposed to populist parties, which are doing quite well, and the long-term trend is certainly up. But, we haven't seen the huge surge in support for far-right populist movements that many had feared at the outset of the energy crisis last year.
And by comparison to some other parts of Europe, Federico, the Spanish economic story might not look quite so damaged by all of the tension, by the inflation pressures and the energy scramble for energy sources that we've seen elsewhere. How has the economy therefore played out in this campaign?
Yeah, absolutely. The Spanish economy is doing relatively well. As you said, it was a little bit more shielded from the worst effects, at least, of the energy crisis that affected Europe last year. It's expected to grow at a fairly healthy rate, to close to 2% this year and next. Spain, of course, has been leading the way amongst major European economies in terms of the decline in inflation. So this has helped the incumbents, the Socialist Party, a little bit, at least in terms of shaping the election narrative. Everything else being equal, though, given the very high inflation environment, so the cumulative impact of the erosion in real incomes that Spain, too, has suffered, net, I think this should help the opposition over the governing socialist parties. It's one of the more structural factors that we look to beyond just the movements in opinion polls to try and gauge how the election might play out.
Okay, Federico, thanks very much for joining us. Federico Santi, Senior Analyst for Europe at Eurasia Group. Let's quickly revisit what's happening in Japan, because we'll get further analysis of this theme coming up on the program. BOJ officials, according to our sources, see little need to act on yield curve control for now. And this is important because we have a BOJ meeting taking place next week. The yen continues to weaken. We saw it at 140 or so before this news hit, now at 141. It seems some in the market had positioned, of course, expecting some change in yield curve control policy, some tweaks perhaps next week. Will that not come through? And do we see that in the reporting and the market trading accordingly? More on this shortly. This is Bloomberg.
So Fabian, talk to me a little bit about the ocean. It covers 70% of the planet. It gives us food, it gives us jobs, it gives us, of course, oxygen. We're taking too many fish out, we're polluting it, we're making it warmer, and only 3% of it is protected. What frustrates you the most about this?
The basic frustration is our ignorance about how integral ocean is to not only our well-being, but to our existence. And for far too long, we've been using the ocean as an endless resource in a garbage can. Imagine our planet is a three-dimensional system. The ocean represents 99% of our world's living space, about 3.4 billion cubic kilometers of volume, within which the vast majority of biodiversity lives and thrives. And that's what we're beholden to. That is what makes us possible as a species.
Information you want, analysis you trust. Everything you need to get set for the start of U.S. trading. Watch Bloomberg The Open with Jonathan Ferro. Weekdays on Bloomberg.
Welcome back. This is Markets Today here on Bloomberg TV. We are showing you a chart of the dollar against the yen. You can see the yen weakening here. The yen extending its drop after the BOJ said it sees little need to address the side effects of its yield curve control program at this point. What does all of this mean? Let's get some thoughts from Bloomberg's Danny Berger, who has been looking at the story for us. Danny, thanks for joining us. So why has the BOJ decided there's no need for any tweaks to yield curve control? Because there's been a lot of expectation based on its sort of outlier status in monetary policy that it would change.
Right. Well, according to the scoop from the Bloomberg team in Japan, it really revolves around market functioning. Remember last time that we did get a tweak of YCC, it was because the thought was the bond market wasn't functioning properly. It wasn't about inflation. So this time around, a lot of the officials are saying, look, the yield curve is smooth, the control there is smooth, market functioning, not showing any signs of major issues. And so if we were to go and tweak YCC, the market would interpret this as us saying we're going to start tightening policy when they don't necessarily want to at this stage, because they always say this, they need to make sure that inflation is sustainably above their target. Now, people do and can argue that it is sustainably above their target, but I think they're scared of sending that message too early.
Okay, yes, and remind us why then they would have been considering a tweak in the first place. And this is, you know, there's various things going on with YCC in Japan, aren't there? There's talk of tweaks, whether they change the focus from one part of the curve to the other.
Absolutely.
But then there's sort of longer term reviews taking place, thinking about the bigger picture impact of having negative rates for so long.
Yeah, exactly. And I think to some degree, no one wants to be that guy that upends Japan when there's finally some inflation in there. But if you look at Japanese inflation, 3.3%, I mean, we're in this bizarro world where that's higher than what American inflation is right now. So many people would look at that and be like, look, the negative impacts of having negative interest rate, they don't make sense in this environment. We don't need this. We can abandon yield curve control. Of course, doing that, they would surprise the market. They would never really pre-forecast that, and it would have big ramifications for the market overall.
Yeah, and so you do get confused. I get confused talking about tweaks, because for a long time, a lot of people said you can't tweak this. You're either in it or you're not.
Yeah.
But now we are talking about the possibility of tweaks. Just quickly, we are going to see this NASDAQ rebalancing, which I know you're also fascinated by, and what that takes us into by Monday.
Yeah, it just means a lot of volatility. 2.4 options expiring at the same time we're having this rebalancing. Doesn't necessarily directionally mean anything, but Anna, I mean, there's going to be a lot of volume, a lot of volatility.
Yeah, we were talking to Karen Chidid of BlackRock. He was certainly suggesting that this is something to keep an eye on in terms of the breadth of the rally that we've seen stateside around those tech names, the breadth of the rally and then the breadth of the retreat, perhaps more recently. Danny, thank you very much. Bloomberg's Danny Berger with the latest on some of those market moves in focus, specifically around the BOJ. We'll keep an eye. How weak will the BOJ, will the yen get as a result of these headlines across the Bloomberg terminal? This is Bloomberg.
I don't think we can replicate Tesla. Tesla is a unique because when they founded and then the personality behind it, The product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customers like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
It's a hurricane over real estate right now. We're in the Category 5 hurricane, and it's sort of a black cloud hovering over the entire industry until we get some relief or some understanding of what the Fed's going to do.
And market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London with the conversations that matter, and here's what's coming up on today's program. Stocks struggle for direction after big tech dragged the Nasdaq lower. There are signs of strength in the U.S. labor market. The UK Prime Minister suffers a double defeat, losing 2 Conservative seats in special elections, but avoids a whitewash. The pound gains on stronger than expected retail sales. Plus, the U.S. Federal Trade Commission pauses its trial against Microsoft's acquisition of Activision Blizzard. Later, we'll be speaking to the UK regulator standing in the way of the takeover. Now, let's take a look at the European markets map. There's quite a lot of news going on, and actually a Bloomberg scoop on the BOJ saying for the moment they will not tweak any yield curve control. Now, this is maybe because otherwise it sends a message that they're ready to abandon it. And so for the moment, this is a nice Bloomberg scoop that's moving yen. We'll get onto that in a second. Reminder, it is a huge, huge week next week. We not only have central banks, but we have around 250 trillion worth of company stock actually coming out with earnings. Today, you can see there's this pull as markets look for direction with the Fed after that data from the US. And again, if you look at the earnings, a lot of them beat, but when they did not beat, and there are certain sectors that are doing worse than others, then it's a real drag lower. We need to talk about the yen after that Bloomberg scoop, and then we also need to talk about the NASDAQ because we're seeing this out of cycle rebalancing. So let's start with yen, 141.44. I cannot wait to speak, of course, to our MLive reporter, Noor Al-Ali, about this to really try and understand the psychology of the new governor of the BOJ and why he's saying and pushing back against any kind of tweaking of yield curve control right now. The other story, of course, we're watching is what's going on with the NASDAQ. So because we have options probably finishing off today with, of course, this rebalancing, which is quite out of cycle. We're expecting some exacerbated moves that we've seen also for the last week or so. S&P futures, NASDAQ futures, you can see down for the NASDAQ, up for the S&P 500. And then this is really the story that I think will take a lot of time for people to understand what the longer term implication is. So the NASDAQ has been worried that they rely really on 7 stocks that are huge and that weigh almost too much in the index. And so they're trying to change that, actually the Magnificent 7 accounting for most of the NASDAQ surge. And so there's an out-of-cycle rebalancing. And that, of course, will have an impact on portfolio building. Now, to talk about all of these stories, we're now joined by Bloomberg's Markets Live editor, Noor Al-Ali. Noor, you were about to come on, and the BOJ basically telling our reporters or Bloomberg sources said that the BOJ is not ready to tweak. Are they worried that if they tweak, it sends the wrong message?
Yeah, potentially. I mean, if you take a step back and you see what's happening in the global picture, you're seeing inflation easing in the UK, in the US, and that's sort of feeding into Japan, which is a big trading partner with these economies. So definitely something that, you know, the dovish central bank governor in Japan is looking at. But also, when it comes to Japan, inflation still remains higher than target. No. What that means for markets, though, is more volatility, as we're seeing in options trading.
Now, I was in Sintra in Portugal, and it was incredible. You had like the five, you know, most important central bankers, and it was really quite lonely if you're the BOJ trying to kind of do the complete opposite of all the others. How do you measure success if you're BOJ governor?
Well, you make jokes, right? As they did on the panels there. But also, you look at your economy in a very different way than you look at potentially the U.S. and in the UK, which are, you know, very different and idiosyncratic stories there. But in Japan in particular, you do have a scenario where the yen is really pushing against what the Bank of Japan likes to see. Now, obviously, the issues with Japan there are with inflation staying a little bit higher than target. It did come in lower than expected. Earlier data out of Japan, the CPI data that we had today, but at the same time, you still have an economy that's much more immune to what we've seen in the global picture in terms of those inflationary and supply end troubles. So we have some expectations next week that the Bank of Japan was obviously going to amend its yield curve control. We've seen earlier reporting just a few minutes ago that goes against it, but predominantly the market is still expecting the Bank of Japan to remain in line with the status quo.
Nora, so you know, beautifully right about the markets every day. When you look at what we've heard so far, it's earnings, a picture, I think about 60% beats expectations. The ones that haven't done so well are really getting slammed. Next week, I mean, it's crazy. Everyone's reporting, especially on the S&P 500, and we have central banks. What will drive these markets forward?
It's a lot of volatility going forward, right? And remember, in summer trading, we have thin volumes, so they really pick up that volatility, and it becomes, and those moves become a lot more outsized. So you see larger moves, you see larger size and scopes of moves in the indexes that we haven't seen in months, and that ties to a lot of the uncertainty that we've been driving in the markets currently. You know, we're in the current blackout period for the Fed. You're seeing the dollar really struggle in the absence of that hawkish guidance. I think also out of China, you're seeing a lot of that data come in. You're seeing more stepping up of efforts from the PBOC to stimulate its economy, although it's a lot more isolated, though earnings still not responding to those recessionary fears that we're having so far this year. And I think we're seeing that lagged effect probably coming into the next quarter. So while earnings are doing very well this quarter, I think the impact or that feel of those recessionary concerns are coming in next. So I'll be looking forward towards the forward guidance of those companies to see just how optimistic they are.
Yeah, and also let's take stock on technology. Just 1 second. The U.S. Federal Trade Commission has paused its in-house trial against Microsoft's $69 billion acquisition of game developer Activision. Now that opens the door to potential settlement talks. Joining us for more is Bloomberg tech reporter Aggie Cantrell. So Aggie, good morning. What more do we know about the FTC's pause on its in-house trial?
Yes, so this was a trial set for August that was going to be assessed by an in-house judge from the FTC. The concern is essentially around whether or not this deal is compliant. This is the same with that we've also seen in the UK. The UK authorities took a stance against the deal back in April. And we're also seeing from the US side now that essentially now we've opened, the FTC has opened the door for Microsoft to try and get a settlement from the FTC to try and convince the authorities that that they would be able to go forward with this deal with Activision. In the UK, they've also decided, Activision and Microsoft, to extend their merger agreement until mid-October, until October 18th, in an effort to also come to an agreement with the UK authorities. So what we're really seeing here is these companies are really doubling down on trying to make sure that this deal works, and it's also maybe a sign for other people looking to make deals at the moment that if you really put in the effort and maybe pay the right lawyers, you can maybe get what you want.
So overall, not a good time for tech, though, right? I mean, this also comes in a complex, I guess, where we wonder about the rally and what comes next.
Yes, so we've seen a rally in tech despite huge job losses earlier in the year. We've seen a rally in tech as people have managed to double down on narratives around AI and focusing on investment in new forms of technology like generative AI. And that's seen a real boom in tech. But as we see the earnings coming in now for the second quarter, there is a concern that potentially some of that initial excitement around new technologies is maybe a little premature, and they're waiting to see where this goes. And so there is a fear in the market, it seems, that the tech rally may have gone too fast, too far.
Aggie, thank you so much. As always, Aggie Cantrell there with the very latest on, of course, Activision, but also the rally in general. Still with us, Bloomberg Markets Live editor Nora Alali. There's a lot going on, Nora, when it comes to tech. So not only do we wonder about the rally, but also there's this NASDAQ reshuffling, which is out of cycle, and then a couple of options expiring today.
Yeah, absolutely. And that's going to add to the volatility that we're expecting. We saw the NASDAQ 100 really, like, in anticipation of today, really drop to levels that we haven't seen in quite some time, right? And that gives you perhaps it's a lot of positioning in place. Also, you have a lot of big caps that are in the NASDAQ 100 that are being affected by this today. And so that's something that's going to really drive the market sentiment today, though I anticipated some more adjustments into the next week and into the next quarter, because if you're tying in a Fed easing its tightening cycle, you're probably a lot more optimistic about tech than you are other sectors as well.
Nora, thank you so much. As always, Nora Alali stays with us, of course, and we'll also get her thoughts on the UK. Coming up, a setback for Sunak. The UK's governing party loses 2 of the 3 seats up for grabs in parliamentary by-elections. While we discuss what it means for the Prime Minister, that's next, and this is Bloomberg.
Was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500.
The top names in global leadership are on Bloomberg.
We have reformed the whole ecosystem around attracting foreign direct investment.
To get everybody to the table was the most difficult thing. Now we're here. The next is consummation.
The commitment is there. Now what we need to see is the actions.
Nobody covers the top global leaders like Bloomberg Television and Radio, your global business authority. Season is here.
You're going to see cracks start to emerge. This earnings season could be a little bit choppy.
This is going to be an earnings season mystery. Bloomberg breaks the numbers first.
Those earnings just crossing the wire.
Up by 25%.
Absolutely blew out of the water expectations.
With exclusive expert analysis.
We're starting to see earnings recovery emerge.
AI will be a huge boost of revenue growth.
We're not going to see the same follow-through in terms of the price reaction.
Second quarter will be where the rubber meets the road.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Welcome back, everyone. Now, Rishi Sunak's Conservative Party has suffered a major setback, losing 2 of the 3 seats up for grabs in parliamentary by-elections. Well, joining us now is Lizzie Burden, our UK correspondent. Good morning, Lizzie. So take us through these results.
The Prime Minister's own constituency in North Yorkshire. He's also lost Somerton to the Liberal Democrats, and that one is by an even larger swing than Selby. So it illustrates the challenges at 2 different ends of the country from 2 different angles, the Liberal Democrats and Labour. But it wasn't a total whitewash because the Conservatives did manage to hold on to Uxbridge, which of course is the former Prime Minister Boris Johnson's former seat. But in that case, it might more have been to do with local factors. If you're a Londoner, you'll know that there's this extension planned of the ultra-low emission zone, which has been quite controversial, proposed by the Labour Mayor of London, Sadiq Khan. Nonetheless, it underscores just how difficult the path is going to be to the next general election for Rishi Sunak. We understand at Bloomberg that that's going to be November 24, because that's when Rishi Sunak thinks that the economy will be on a better footing. But there was some bleak analysis from the polling guru John Curtis. He said that replacing Liz Truss with Rishi Sunak doesn't really electorally seem to have made much difference at all.
Lizzie, thanks so much. Lizzie Burden, our UK correspondent. Now, we also get retail sales from the UK this morning, which got a boost thanks to a hotter June than expected. Now, for more, Dan Hansen, our senior UK economist at Bloomberg Economics, joins us, and Noor Al-Ali from our Markets Live team is still with us. So thank you for sticking around, and welcome to the program. Dan, I love it because every time I'm in a BOE like presser, they say, well, you should have listened to Bloomberg Economics because they get it right. So first of all, where are we in terms of how many rate hikes you're still expecting from here?
Okay, yeah. So from here, we're expecting one in August, and I think there's still a really big debate about the size of that. Yeah. So is it going to be 25? Is it going to be 50? And then beyond that, we think there'll be a hike in both September and November. So a peak of 575. How does that compare to the market? The market's between 575 and actually a little bit closer to 6 now, particularly on the back of that retail sales data. But it has obviously moved down significantly. We were talking maybe 2 weeks ago about 6.5. We've come down maybe 75 basis points from that. So it's quite a significant shift, but there's still work to do. But
when you look at the inflation figure, that was really a surprise or a welcome relief. When can you say it's really peak and that actually it's not a blip, but it's the interest rate hikes that they've done so far that are starting to take effect?
Yeah, I mean, that's a really good question. I think the really key thing about the inflation number, and you're right, it was really good news, and there was good news on the core side as well, and that's that sticky bit that the Bank of England worries about. The key thing to look at, though, is that even though the headline number is in line with the Bank of England's forecast from May, which seems like a lifetime ago now, the composition of inflation isn't as favourable. So it's fuel prices, it's food prices that have done the heavy lifting in bringing inflation down. Services inflation, the sticky bit, is still high, and it's higher than the bank's forecast. So that's why we think they're going to carry on going and hiking. So it is good news in a headline basis. Underneath, it's not quite as good news. There's still some stickiness there.
Okay, so Marin Talks Money is a wonderful podcast, and they also spoke to the former Bank of England governor. Of course, he's Mervyn King. This is what he had to say about future interest rate hikes.
And I think it's quite possible that having lost control of inflation, and therefore having lost a good deal of credibility, that central banks will see that the safest course for them is one of overkill now, so that they do bring inflation back to 2%. And if they carry on for the next 6 months or so tightening monetary policy, it could well be that they generate both a recession as well as a sharp fall in inflation.
Nor is there a danger that actually there's over-tightening, again, because it almost goes really to the credibility. Like, if they can't deal with inflation, then this could have repercussions on what markets see the central banks doing for like decades to come.
Absolutely, that's an excellent question, Francine. I'm going to point you to the retail sales data that came out earlier today. It did come in much higher than expected, obviously, earlier in the session. But if you look at the value versus the volume, you'll see that people are paying more for less. Now, even though that could have supported the argument that, oh, look, the economy is doing much better than we'd expected, actually, if you look under the surface, in the belly, you'll see, to Dan's point, that there is actually a lot more more concerns about those inflationary pressures really being a lot stickier than the Bank of England is much more comfortable with at the moment. So unfortunately for the Bank of England, from a market's perspective, there's only one of two options: either keep hiking or, you know, continue on with the path that you've come in and really push forward. That ultimately, unfortunately, will impact the economy into what Bloomberg Economics, of course, expects a year-long recession, which of course doesn't bode well in comparison to the US and the EU, where of course the rate differentials will play much more in favor there.
And then if we have inflation, let's say at 3%, and it kind of gets stuck at 3%, can the BOE live with that?
From my perspective, no, because you get to 3 and then you say, oh, I'm going to change the target, you lose your credibility, and the whole idea of inflation expectations being bedded down, you just lose that. Because the next time there's an inflation spike, companies, households will be like, they get to 4, they're just going to change the target again. So you lose your anchor, you lose your nominal anchor in the economy. And going to Noor's point, you know, she quoted our forecast there. I think the easy bit will be getting down to sort of 4, maybe 3. The hard bit will be getting from 3 to 2. And I think that's why what the former governor just said there is probably right. They're going to do more rather than less to make sure that they get to that 2%.
But will the labour market hold?
Well, it's so tight. I mean that's the thing that they have to. Where this all ends is if consumers say to businesses, "No, I'm not going to pay that higher price." It's at sort of recessionary levels now. If that continues, then I think, you know, you're going to get a change into the second half of the year in terms of the narrative around the economy. And hopefully, you know, with that, inflation will continue to come down.
So interesting. Thank you both, Noor and Dan, for joining us. Dan Hansen, Senior UK Economist at Bloomberg Economics, and Noor Al-Ali from our Bloomberg MLive team. Now, coming up, wheat is set to end the week with big gains on fears about Black Sea shipments. So we'll have plenty more on that next. And this is Bloomberg.
What do you like most about your job?
I think the people. I mean, ultimately, we're a people business. A lot of what my job is as CEO of the company is to give those people sort of motivation, to tell them where we're going, to encourage them to come up and do their best work, to encourage them to collaborate. Sometimes you sort of think you're almost a psychologist, you know, as you are a business leader, I think, sometimes.
And so what's your best piece of advice?
I love pitches. I love being sort of leading from the front, if you like, and spending times with teams. I love to see the work that we're doing. When we pitch for a piece of new business, often when we come together. So I guess I try and put myself in the seat of the client. What's the client going to think when they see this work? Are they going to be excited? Is it going to turn their brand around? How's it going to resonate with their consumers? So as much as possible, I think probably I try and play that role.
3 prime ministers, 4 chancellors, an energy crisis, and the soaring cost of living. It's been a hard year for startups, but even in the toughest times, some of the best ideas are born here in the UK. Bloomberg UK's Startups to Watch will profile the brightest companies under 10 years old, with the winners unveiled at the Bloomberg Technology Summit in London in October. Get your entry in by the 7th of August for the chance to have your company profiled and to attend unique networking events. Good luck, and we hope to see you there.
This month, Bloomberg brings you the latest from China's 14th Annual National People's Congress, including China's COVID recovery, economic outlook, and geopolitical tensions. continuing coverage this week on Bloomberg.
The good news on inflation is it's trending down. The Fed is really winning this war. They're not ready to declare victory. I think they're going to raise rates, it sounds like, one more time, and then they're going to hold them here for a longer period of time to try to slow the economy, and we expect they'll be successful in doing that.
The Blackstone president and COO, Jonathan Gray, speaking to Shonali Bazak about the fight against inflation. Now, wheat actually heading for a weekly gain of more than 10% on fears that growing threats to the Black Sea grain trade could curb supplies. Crude oil, meanwhile, set for its fourth weekly gain on signs of tightening supply. Now, joining us with the very latest is, of course, our commodities czar. He's Bloomberg's Will Kennedy. Will, if you look, good morning, first of all, if you look at wheat prices, how much more can they continue to rise, given this is geopolitics, this is like, shelling, and so we don't really know where it ends up?
Yeah, I think the shock this week was not only that the grain deal ended, which many people had seen coming, but that afterwards the rhetoric from Russia and then the Ukraine was so strong, and Russia made clear with its attack on Odessa and its threat to sink Ukrainian ships coming out of Ukrainian ports, that it wasn't going to allow those exports to continue, and the market reacted quite strongly. The upside from here may be limited because I think the wider picture, and my colleague on opinion, Javier Blas, read a very good column about this morning, is that fundamentally the global market for wheat is fairly well supplied, and a lot of that is Russian wheat, where the harvest looks very strong and exports look very strong. I suppose the one joker in the pack might be if Ukraine were to follow through on its threat to attack Russian ships, that could see prices go higher, but that would be a big escalation.
Yeah, that would be almost like all bets are off. When you look at oil prices, like what's moving the markets right now?
I think we're in a tug of war. On the one side, you've got the increasing impact of the Saudi million barrel cut in July and August, as well as signs that Russia is finally curbing exports, pitted against continued weak economic data from China, which of course tends to be the big driver of demand. At the moment, I think the concerns about constrained supply are winning out, so you've got the fourth weekly gain, as you pointed out, but I think further gains may be capped as people watch just how quickly the Chinese economy slows.
Will, thank you so much, as always, for joining us. Of course, he's our head of commodities, Will Kennedy, there in Barbie pink shirt. I would add, I'm not in Barbie pink. Will definitely is. Coming up, shares fall in Norsk Hydro after the European aluminium giant raises its capital expenditure guidance for the full year. We'll be discussing all of that with the Chief Financial Officer, Paul Kildemo. That's coming up shortly, and this is Bloomberg.
Say race relations in the United States are much better than when you were growing up in Mississippi, or do you think we've made less progress than you think we should have made?
Both. I think they're much better than when I was growing up. There's so many people who occupy areas and I never thought I would see them in. But I would have hoped it would be better. It's been a lot of progress. And somehow we're in an era now where, in spite of the progress, race relations in certain areas has become very scary. You know, some of the things that one reads about now remind me of growing up in Mississippi.
The names that move markets are on Bloomberg.
China has seen slower growth than they expected. Many countries do depend on strong Chinese growth to promote growth in their own economies. For the United States, growth is slowed, but our labor market continues to be quite strong. I don't expect a recession. I think we're in a good path.
Nobody covers business like Bloomberg, your global business authority. In a multi-trillion-dollar industry, there's a lot of ground to cover.
We indeed have a rally.
We're talking a lot of dividends. We're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
This is Bloomberg.
Now, the yen extended its decline after Bank of Japan officials see little urgent need to act on yield curve control for now. The UK Prime Minister suffers a double defeat, losing 2 Conservative seats in special elections, but avoids a whitewash. The pound gains on stronger than expected retail sales. Plus, the US Federal Trade Commission pauses its trial against Microsoft's acquisition of Activision Blizzard. Later will speak to the UK regulator standing in the way of the takeover. So good morning, everyone, and welcome to The Pulse. I'm Francie Lacqua here in London. Now, Norsk Hydro shares are lower after the European aluminium giant raised its capital expenditure guidance for the full year. Well, the company is also asking the London Metals Exchange to reconsider banning Russian supplies over fears that large inflows could actually distort the global benchmark. Let's talk to the Norsk Hydro's Chief Financial Officer, Pal Kildemo. Pal, thank you so much for joining us. When you look at margins going forward, when you look at some of the difficult issues you're facing, what worries you the most?
Well, in general, we see demand falling quite a lot year over year. That is, of course, concerning as it will impact profitability going forward. But we operate in a cyclical industry, so this is something we are well used to. I think one area of concern currently is what you touched upon. It's the amount of Russian metal that is coming into our system and basically being sold at discounted levels to normal aluminium. And we are at the currently running the risk of having 2 separate markets, one for those self-sanctioning and one for those who doesn't do it. And for us at this quarter, it's a cause of concern that the LME allows Russian metal to continue to be traded there, because we are scared that the LME might lose its reference as an indexing price for aluminium.
So, Pal, give me a sense. You've reported ongoing weakness in the demand outlook, right, for aluminium this quarter, especially in building and construction. Have you seen any declines in orders?
For building and construction, we've seen big declines. Building and construction and extrusion, for example, is down 20% plus on an annual basis. So that's really the weak segment across the portfolio. The areas which are seeing more strength is typically automotive and also heat variant or elements which goes into ventilation and those segments, and also everything which supports the green transition, so solar, renewables, and the like.
Pal, you've also outlined your concerns about the concentration of Russian aluminium to the London Metal Exchange warehouse network, of course, which it now stands at over 80%. Talk us through your thinking and what the response so far has been.
Well, our thinking is that the LME should act as a reference price for the whole of the industry. And at the moment, we're in a situation where there's 2 types of metal. It's the Russian metal, which a large part of the industry can't buy because they've been self-sanctioning, which is sold at a discount to normal metal. And when the LME continues to allow the storage of Russian aluminium at its inventories, now at an 80% level, basically, as a consumer, if you go to the LME to buy metal, you may end up getting Russian aluminium and you can't take it. So we're scared that the LME will lose its role as the reference index. And that's why we've asked them to reconsider their position.
Yeah, I was going to say, I mean, concretely, what can the LME or its regulator do about this?
Well, I guess back in October 2022, the LME had a questionnaire to the different participants on the index, asking what they believe they should do with Russian aluminium, where sanctioning or not allowing it to be part of the trading system was one of the alternatives. They decided against that at that point in time. Then Russian metal was a small part of the total tonnage stored. Now it has increased significantly. This causes concern for us because it's a reference in all our contracts, and that's why we've asked them to reevaluate this situation.
But like many aluminium smelters in Europe, you also curtailed some of the output during the energy crisis. If prices stay at these levels, would you kickstart them again?
If you look at the whole aluminium industry in Europe, over 50% of capacity is curtailed. You had 2 more curtailments in the current quarter. If you look to Russia, it keeps increasing capacity, and there's an increase in exports into Europe. And the reason why these smelters are curtailing is due to the high energy prices, which is a direct impact of the ongoing war. We don't see that there's a large risk of restarted capacity now. In China, they are restarting, but on Europe, there's probably further risk of further curtailments. We have around 130,000 tons out. We could restart it. It would make sense from a financial perspective, but there's not a market for that metal at the moment. The metals markets are in oversupply, so we are not currently planning to restart either.
You could have actually joined a tender to develop an offshore wind project in the North Sea through Hydro Rein. You decided not to be part of that. Why?
Well, the world needs more renewable hydropower, and we will continue to develop renewable hydropower in our Hydro Rein business unit. But if you look at the total portfolio of projects within that company, then we have more interesting opportunities, which will bring power shorter in time and at better returns for Hydro Rein.
And so what does that mean going forward? If you look at the main factors in future decisions of tender, is that likely to change?
Well, we will still evaluate projects within the offshore wind space, but those projects that look most likely for us going forward are either onshore wind or solar.
If you look at the hydropower energy generation in Norway, what's it looking like this summer? Is it better than last year?
Well, it is actually much better than last year, which means that the summer in Norway is poorer than last year. We have wet and cold conditions now from a historical perspective, so the reservoirs are more at normal levels, whereas last year we were well undersupplied. So energy prices have come significantly down in the Nordic areas.
All right, Paul, thank you so much for joining us. Paul Kildemo there, the Chief Financial Officer of Norsk Hydro. Coming up, it's a big day for the cinema. It's a big day for Barbie, in case you didn't know. We'll discuss the internet phenomenon called Barbenheimer. That's a mishmash of Barbie and Oppenheimer. A lot of young, cool people are seeing them back to back. So we speak to the founder and chief executive of View, one of the UK's largest cinema chains. That's coming up next, and this is Bloomberg.
I don't think we can replicate Tesla. Tesla is a unique because when they founded, and then the personality behind it. The product is beautiful, technologically very, very strong. So in many areas, Tesla is Tesla, but Xpeng is Xpeng. We want to focus on what we think is important for our customers. Our customer like beautifully designed vehicles, either it's large SUV or sports sedan. We believe we have a very, very appealing family look that our customers is really attracted to. They like to have user-friendly features inside the cabin that has a technology feel. It's very smart. It enables them to really utilize the vehicle that's different.
Studios in New York and San Francisco. Our expert hosts have the data and analysis about the companies you know and the startups to watch. Plus, the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
The conversations that matter, the insights you need. This is A Pulse. I'm Francine Lacqua here in London. Now, it's a big day for cinemas as the movie meme taking the internet by storm hits the silver screen. Greta Gerwig's Barbie and Christopher Nolan's Oppenheimer both opened today in the UK, US, and many other countries, something that's been dubbed Barbenheimer. Now, while it is expected to be a very big day for the box office, productions across the globe have come to a halt as Hollywood actors also continue their strike over pay and the use of AI. So we are delighted to be joined by this wide-ranging conversation, really from Barbie to strikes, by Tim Richards. He's the founder and chief executive of one of the UK's largest cinema chains, View. Tim, first of all, thank you for joining us. Which one are you seeing first, Barbie or Oppenheimer?
I've seen both. And I'm going to go back and see them both again. And I realized before I got on, I probably should have been supportive and worn my pink shirt. But I mean, it's extraordinary when you look at, if you walk around London right now, in fact, if you walk around large parts of Europe, you see people wearing pink in support of this film. It's this cultural phenomenon. I mean, I was on with our team in Italy this morning, and you've got this kind of like crowds lining up in Milan and Rome wearing pink, and not something you normally see.
Pink? I don't know who would wear pink. Tim, given I'm never in pink, and I'm in like very bright pink. Tim, how do you explain this phenomenon? So I don't know whether people want a bit of fun, whether COVID's changed the way that people see memes. I don't know why it's captured the imagination of so many people.
Well, I think a large credit has to go to Warner Brothers. I mean, I think they've done a phenomenal job marketing it, using social media, and we've seen, and we saw what Universal did last year with Minions, with the gentle Minions phenomena, and it just shows when you actually use social media and promoting and marketing films properly, what can happen. But it's a great movie. I mean, everyone kind of either knows or grew up with Barbie. And I think Greta Gerwig really kind of just captured something in this film. Margot Robbie, I mean, she was born to be Barbie. And Ryan Gosling was actually had to be Ken. I mean, you see the two of them together, the chemistry with the two of them. But this is a movie that I mean, Greta Gerwig's done such an incredible job, because everyone that sees that movie will come out of it with a slightly different takeaway. It's got so many different layers. And and I think that's why it's going to do so well. This is a movie that the advanced bookings right now are higher than Avatar 2. This is going to be our biggest day post-pandemic in 2.5 years.
So Tim, I was going to ask you, is this for the double feature of Barbie and Oppenheimer, or is it mainly Barbie? Like, how many people are actually going to see the two films back to back?
Well, 23% of our customers, an extraordinary number, have actually booked both movies to see them. And a lot of them are back to back. And then there's this amazing kind of social media debate. Do you see Oppenheimer first, or do you see Barbie first? And kind of the repercussions of seeing those at different times. But I think, Oppenheimer is probably one of Chris Nolan's best films. I mean, it is You know, when I walked out of that movie, I just thought, like, why hasn't someone told this story before? And it happens to be all true too. But he's done kind of this incredible job in bringing Oppenheimer to life, and it's an unbelievable story. So the two of them together, but also, I mean, don't forget, you know, this is also joining Mission Impossible. You know, Tom Cruise's latest, absolutely kind of breathtaking 2.5 hours, hold on to your seat movie. So there's a lot
Tim,
of great
when you
films
look,
over there.
I know, but so I was reading when you look at Mission Impossible, and actually I was speaking to our film buff, Sarah, here. Mission Impossible, Indiana Jones, maybe underwhelming a little bit in terms of expectations and how many tickets are actually booked. So what do audiences want? Is it the social media kind of trend experience? Like, what makes, you know, someone choose one movie, not the other, before it comes out?
Well, I think, I mean, the one thing that hasn't changed in the last 3 or 4 years, and there's been a lot written and discussed about it, I mean, our audiences never left us. They were with us the whole time. They just didn't have movies. And I think what we've seen in the post-pandemic era is we've seen every single demographic group, from young to old to ethnic, all genders, everyone has come back to the movie and to movies. But you've always had movies that performed. Some of them have been performed more or less than others, and some of them have been disappointing. And I think, you know, it's fair to say Indiana Jones, I think, was maybe a little bit disappointing, even though it's a great movie. And I think people who go and see it love it. And Mission Impossible, you know, for us, it's tracking to be Tom Cruise's biggest Mission Impossible in the franchise. And I think it's all going to get a bounce this weekend.
Tim, when you look at the strikes, of course, in Hollywood, it's early days, but do you worry about the pipeline of movies coming out, that, again, there won't be enough?
No, I mean, look, the strikes are unfortunate timing, but I think that, you know, I worry more about kind of, you know, our customers have come back, and I think that this might slow down the recovery a little bit, which is not ideal timing. But, you know, I think, fortunately, the big summer movies, you know, the Barbies and the Oppenheimers and Mission Impossibles and a few others have all been marketed and promoted and released. So, you know, we're in good shape for the summer. And I think, you know, this fortunately only happens every 40, 50 years. You know, we're hoping that this will have a quick resolution.
Tim, I always ask the tough questions, and I really need an answer on this. Barbie or Oppenheimer first? Like, when what did you see first?
I saw Barbie first, but that's only because of the premieres dating. They were back to back Tuesday, Wednesday. It's a bit of a cop-out.
So if you were buying a ticket,
I mean, it is. They are both such genuinely amazing movies, and they're so entertaining that I don't think it matters what order you see it in. I think it's just seeing them both as well. So I would probably, I don't know, I'd probably start with Oppenheimer, only because I just thought it was just such an incredible movie.
There you go. Oppenheimer first, and then you can finish with a bit of Pink to maybe lift your mood. Tim, thank you, as always, for joining us. Tim Richards, founder and chief executive of View International. Now, coming up, Spain heads to the polls on Sunday. We discuss what's at stake next. We're live in Madrid, and this is Bloomberg.
The deal was the brainchild of Apollo CEO Mark Rowan. In January, Apollo closed its $11 billion all-stock merger with Athene Holding. It had already owned 35% of the insurer. Here's what Apollo gets out of the deal. Assets under management. Apollo expects them to double to about $1 trillion by 2026. Much of that projected growth will come from the merger, and those assets are especially attractive to Apollo. Insurance companies typically go after much more modest returns than buyout investors. That will give Apollo more options for investing the cash. Athene is a steady provider of fee income. It has grown into one of the nation's biggest holders of fixed annuities, those retirement savings products favored by risk-averse customers. The merger will also allow Apollo to simplify its governance. It gave up its dual-class share structure and adopted a one-share, one-vote plan. The hope is that will eventually lead to Apollo's inclusion in the S&P 500. How did Jeff Bezos realize you could sell anything on the internet?
The web was growing at something like 2,300% a year. Anything growing that fast is gonna be big.
Why did Bill Gates create Control-Alt-Delete?
Kind of become the poster child of, hey, couldn't you have made this stuff a little simpler?
And what inspired Diane von Furstenberg to create the wrap dress?
The wrap dress created me.
On the David Rubenstein Show, I uncover the untold stories of the world's most successful leaders, right here on Bloomberg.
The conversations that matter, the insights you need. This is A Pulse. I'm Francine Lacqua here in London. Now, sticking with elections, Spanish voters are heading to the polls on Sunday. The current Prime Minister, Pedro Sanchez, seeking a re-election, but he does face opposition from the country's Conservative People's Party. Now, for more, we're joined by Bloomberg's Rodrigo Orihuela in Madrid. Rodrigo, what are current Prime Minister Sanchez's chances right now?
Prime Minister's chances, based on the last exit poll, the last polls which were published on Monday, before the blackout started, his chances don't look good based on those polls. He has been trailing the Conservative PP for months, for weeks since he called the election, and the combination that we saw in those polls of the PP with the far-right party Vox would give them the possibility of forming a government. Sanchez has been going on a media blitz to do interviews and try to win over some voters who either left his party, who weren't going to turn out to vote, or who have switched to the PP. We are to see what kind of impact that has had, though, yet.
So what are the issues actually facing the Spanish public?
Excuse me, could you repeat that, sorry?
So in terms of the issues facing the Spanish public, I imagine the cost of living crisis, inflation concerns. Is there anything else that we should be watching out for?
Yeah. Yes, sorry. So the economy was expected to be the key driving theme of the campaign. It was not in the end. What ended up being the central part of the debate was cultural issues, mainly around gender issues, trans rights, and some identity politics issues. As you say, the regional nationalisms and the policies around them were also a key part of the campaign, but it really centered on a sexual consent law that was passed here, on trans rights, on women's rights, and those were the things that really got fired up and were pushed and driven and set the agenda by Vox's view of what had to be the debate, and it ended up being the debate, in fact.
Rodrigo, thank you so much, of course, for the terrific briefing, and we'll follow this very closely. Good luck for you and the team for all of this election coverage. Rodrigo Orihuela in Madrid. Now, yen extending declines today after a Bloomberg scoop that the Bank of Japan officials are said to see little urgent need to act on yield curve control for now. It comes ahead of a major week of central bank decisions and a lot of earnings. Joining us now is Bloomberg's Valerie Teitel. Valerie, good morning, first of all. So let's start with yen. I mean, this was, it was a huge deal. It's a Bloomberg scoop. Our team on the ground have been working tirelessly to get this information. What was the danger if they were going to tweak the yield?
And look, if they were going to tweak yield curve control, you have to worry about this bond rally perhaps coming to an end, because a tweaked yield curve control would release a bout of turn premium into the market, leading yields higher, not just in Japan, but globally. It would also strengthen the yen. So now that we've gotten this scoop with those BOJ officials seeing little need to adjust yield curve control next Friday, we're seeing a very decent move lower in the Japanese yen, dollar yen rising 1.3%. And Francine, that just shows you how much was priced in for that meeting on Friday. That's what it reveals.
Yeah, and I guess the concern is that if they start tweaking yield curve control, then it also gives the indication that actually they could change policy. So maybe they're worried that that communicates something they didn't want to.
Yeah, perhaps a tweak of yield curve control. The market jumps ahead of itself and thinks that they're going to start guiding for a hiking cycle, start lifting those front-end interest rates, which have been negative for so long. And a lot of that would really cause maybe some other problems to other positions you have. If you think there's going to be cuts on the board for the Fed, that position could be rattled just by a Bank of Japan tweak.
And next week is a huge week. And so, I mean, a lot of central banks.
A lot of central banks. We get the Fed, the ECB, and then, of course, the BOJ on Friday. For the Fed and the ECB, wildly expected for them to raise rates 25 basis points, but for both of them, it's all going to be about the nuance on the path ahead. Does Powell still hint about this other rate hike in the cards later this year, or perhaps does he give some consent to that really soft CPI print last week and maybe use that term disinflation is here like he did back in January? For the ECB, do they strike a less hawkish tone? We had one of the most hawkish ECB members not wanting to talk about a Fed hike after July. So what does she say? What does Lagarde say about a hike past July? Does she mention September at all as being a live meeting or in the cards for another hike?
And then so many earnings next week, especially S&P 500.
Lots of earnings next week. Over in the U.S., it's the big tech names. We get Microsoft, we get Alphabet, and then in Europe especially, we get those European bank earnings, most of them coming next week, including Deutsche Bank and BNP at the beginning of the week. I think a lot of people's eye is going to go to the U.S. tech earnings season, as we've had Tesla and Netflix really disappoint so far. What does the rest have to say after that? Do we continue that streak of earnings misses for big tech?
Yeah, and NASDAQ actually a huge story. So watch out Monday for any moves after, in the middle of a cycle, quite unusually, they're changing the index.
Yeah, a big rebalancing for the NASDAQ. It's all about reshifting, rebalancing away from that magnificent 7 that have left the rest of the NASDAQ in the dust. We'll see some of that rebalancing, maybe some of that price action happen today in the markets. Maybe it was some of that softening yesterday in tech stocks, with these passive funds already getting ahead of themselves, already trying to reweight their portfolios as well. But a big reweighting for the NASDAQ. It does take place on Monday. Yep. We have had it known for a few weeks now. NASDAQ announced it on July 3rd. So just how much has it already been priced into the markets is yet to be seen, but we'll see today.
We'll find out today and maybe on Monday. Valerie, thank you so much. Valerie Teitel there joining us on the latest market moves. So let's take a look at what else we're watching, or actually what we're watching. 11:30 a.m. UK time, we'll get the latest interest rate decision from the Bank of Russia. Economists surveyed by Bloomberg expect a 50 basis point hike to 8% before the U.S. market opens. American Express will report earnings for the second quarter. The company expected to make a return to earnings growth after 2 consecutive quarters of declines. Then last but not least, as we've been telling you, 2 big movies are out in the UK and the US. Yes, Barbie and Oppenheimer. Well, cinemas will be hoping for a boost to sluggish revenues from the highly anticipated releases. Up next, Bloomberg Surveillance Early Edition.
So is there more pressure when you're trying to win a basketball championship than when you're trying to please investors? Where's the greater pressure?
Oh, I think it's definitely trying to win a championship. It's hard because a lot of, like when you invest, and you know this, when you're investing, you can control a lot more things. When you know, on a basketball court, you can't control whether somebody's going to make a shot. You've got to get lucky.
And what's the greater pleasure, making 5 times your money on a distressed debt investment or winning the NBA championship?
They're both fabulous. I wish I could do one each year. That would be great. But I think there's a great feeling in being right on an investment that you've done a tremendous amount of work and you've made money for your clients, which I think is great. I think winning a championship it's a very surreal feeling because there's a whole city or state that is actually behind you. You know, we had 70,000 people at the finals, and we had them all outside. You had 17,000 in the stands, and then literally like 60,000 people outside. And when we won, like just the joy that you had brought to the city was phenomenal.
People ask me all the time, what is the key to being a really good investor? And I tell them it's to surround yourself with and work with the best investors you can find. On Bloomberg Wealth, I'm going to take you to meet the greatest investors in the world, the people that I would like to have managing my money.
It's a hurricane over real estate right now. We're in the Category 5 hurricane, and it's sort of a black cloud hovering over the entire industry until we get some relief or some understanding of what the Fed's going to do.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology. And welcome to Balance of Power.
This is Bloomberg. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
Great question.
Great question.
Best question I get all night.
Bloomberg, top experts, great questions. This is Bloomberg Surveillance Early Edition with Danny Berger and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, 5 p.m. in Hong Kong. Our top stories today. Markets are on high alert. Investors juggling disappointing earnings, rate bets, and out-of-cycle rebalances in the NASDAQ 100. It's a pivotal week ahead for central banks, and it's already shaping up this morning. The yen falls on a scoop. The Bank of Japan sees little need to act next week. And in the UK, Rishi Sunak suffers a dramatic political upset while the country's Competition and Markets Authority flexes its antitrust power. We speak with the CMA CEO, Sarah Cardell, this hour. Welcome to Bloomberg Surveillance. This is the Early Edition. I'm Danny Berger in London. Kriti Gupta is in New York. Kriti, as if earnings, as if U.S. data wasn't enough, that Bloomberg scoop over Japan shaking things up anew.
Yeah, it absolutely is. You're already seeing a ripple effect into the bond market and the FX market. But interestingly, the stock market really trading to a different tune. I'm going to start there, though, Danny, because you are seeing NASDAQ 100 futures outperform right now to the tune of 0.4%. That is significant, given the carnage we've seen in just yesterday's session, of course, coming off of the pretty poor earnings coming off of Netflix and Tesla. Looks like a little bit of a rebound. Now, that's pretty natural. When you see a big sell-off like that, you tend to see a little bit of buying on the day after. Plus, remember, you just mentioned that NASDAQ rebalancing on Monday, so perhaps a little bit of positioning ahead of that, plus rebalancing for the end of the month as well. A lot of cross currents coming into the equity market. We're going to digest all of it throughout the hour. But for now, take a look at that bond market move, which is exactly what you just mentioned, coming off of the BOJ. I mean, a bigger move you're really seeing, or in the dollar yen, 141.91. You're seeing dollar strength by about 1.3% there. Of course, coming on the headlines at the BOJ, basically saying there's little need to act on yield curve control. Of course, it's going to send the Japanese yen even weaker. It's not, however, testing the weakest levels we've seen this year. So that's going to be interesting. How much of this is just more of what traders expected? Of course, the ripple effects are crucial as well. We have our eye on the 10-year yield, 3.85 on that note. And lastly, of course, Danny, a check on commodities. Brent crude trading at $80 a barrel.
I gotta say, Kriti, it is kind of a bizarre day. It was a pretty bizarre day yesterday, I should say, with that tech sell-off, that bond market sell-off. And it continues. The weirdness continues here in Europe. European stocks are able to notch an ever so slight gain. They are dragged down by really poor results from SAP after the bell yesterday. SAP seeing less demand than had been hoped. So those shares down more than 4.5%. Sterling also, again, this was another really weird thing. I mean, it's a strange day for FX, so perhaps that explains the pound's movement, but we had UK retail sales come in much stronger than expected. Off the back of that, you get the logical response. You get a sterling which strengthens versus the dollar. But around the time of the BOJ announcement, I guess around the time that a lot of liquidity came into this market and a lot of trades were made, that wasn't sustained. We're now looking at losses versus the dollar for sterling. Same goes for this bond market. It seemed like the rally would be able to sustain itself if the BOJ will not be changing track. We were looking at buying on the front end of the German curve. That has now changed pretty to unchanged.
Yeah, certainly something we're going to be keeping an eye on throughout the session. You're already seeing that volatility, as you pointed out, in the FX space. Let's stick with that. A major week of central bank decisions coming up. The Federal Reserve, the ECB, and the BOJ all on the docket. That comes, as you pointed out and I pointed out, that Bloomberg is learning that the BOJ officials aren't seeing much need to act on yield curve control at this point. For more on that, Bloomberg's Valerie Teitel joins us now. Valerie, look, we've heard this time and time again. You are seeing a market move, but perhaps not as big as expected. What is the read-through or lack thereof into the other central banks? How do we interpret this?
Look, I think this is not only just quite important, it takes a lot of volatility out of what we can possibly get next week. Now we know we don't have a yield curve control break on our hands. We kind of take a sigh of relief and just focus on what the Fed and the ECB can surprise us with. But I, for one, am very surprised about how much yen weakening we're seeing off the back of these headlines. The yen weakening some 1.2%, 1.3% versus the dollar. It really goes to show just how much was priced into this market about a yield curve control break next Friday. And I want to take a look about where those yields have gone, show you how they have reacted to the band. So this is a kind of a historical look about how yield curve control has moved. It started back in 2016. The band has been widened in some mode to help the functioning of the bond market. But we're seeing on these announcements today, yields are ticking down lower, coming off of that 0.5% target that the Bank of Japan has currently on the 10-year yield. The current 10-year yield is now 45 basis points. But I really think that this is going to embolden the bond bulls a bit further. YCC break was one risk that you have to have on your book if you're really thinking about going long the bond market, Danny, about really thinking about wanting to position for a recession, positioning for a possible blip, a weak blip in the U.S. data, being long the bond market. This was the one big risk that could really shake you up, that this YCC break could possibly happen next Friday. And now that we're not going to get that, Danny, I think the market's going to be even more emboldened to buy treasuries here.
That's such a good point, because you and I had talked about this. What ends the treasury rally? It is the BOJ. Could the Fed or the ECB end it, Valerie?
It's a big week for central banks, Danny. Next week, we get the Fed on Wednesday, the ECB on Thursday, and the Bank of Japan on Friday. We don't have to worry about the Bank of Japan anymore, so let's focus on the other two. We've got Jerome Powell taking the stand on Wednesday. We all know he's going to hike 25 basis points, but does he give any concession to that soft CPI print we got last week, or does he still really want to threaten this extra hike that could possibly come in the fall? We also heard some comments from Bernanke overnight saying that this July hike from the Fed could be their last. I have to say the market at the moment does agree with them. They really do doubt that extra dot on the dot plot, thinking that the Fed is going to be done after July. And then on Thursday, we get Christine Lagarde taking the stand. Again, widely expected for them to hike 25 basis points. But does she sound as hawkish as she did previously? Remember, we've had some quite dovish comments from some very hawkish ECB members of late, not wanting to talk about that hike in September. Does Lagarde openly leave that on the table as a live meeting, or does she maybe start to talk about a pause in the cards in the hands for the ECB?
Certainly a lot to digest there. I think the highlight there was that Ben Bernanke might be right. Valerie Teitel walking us through it. We thank you as always. Look, that's the macro story. We've got a ton of micro on deck as well ahead of that big rate decision that Valerie was just talking about, just ahead as well of the NASDAQ 100 rebalancing aimed at reducing the big tech dominance in the index. The heavyweight firms, including Microsoft, Apple, Nvidia, and Amazon, all set to get downward revisions. Bloomberg Sagarika, Jason Ghani joins us now for more. This is a really interesting story, the ripple effects, and when it comes to kind of ETF investing, but also the exposure that's been a no-brainer to the Magnificent Seven. Walk us through who takes their place.
Sure. As you said, the Nasdaq 100 is due for a special rebalancing, to reduce the dominance of the big seven that have basically been responsible for the stunning rally that we've seen in the U.S. stocks this year. So the focus is now going to sort of shift to the smaller companies, and the effect takes place on Monday, which means that today there could be a lot of stock market volatility, given that it is the last window for passive investors to tweak their portfolios to bring it in line with the benchmark index. Also remember, today there's about 2.4 trillion worth of options that is tied to stocks and indexes that are due to expire. So we could see a lot of erratic price action today.
I mean, that is chaotic. That is so chaotic, Sagarika. And I'd have to imagine that liquidity also just gives people a chance to adjust positioning. Yes. Do you think we're going to see a big pullback in tech? I mean, we saw it yesterday. Is this the time to take profits?
I think that's a very interesting juncture, because we just had data from Bank of America citing EPFR Global today. That was through Wednesday, so excluding yesterday's sort of pullback in the Nasdaq. But that showed that actually tech funds are still attracting a lot of inflows, and that's in contrast to broader U.S. equities, which had outflows overall. So it's quite interesting as to what we could see today. Also, because again, yes, next week is a big week for earnings, right? It's the busiest week for the season. We're going to hear from about $25 trillion worth of companies throughout. The stakes are extremely high for big tech, because not only have they rallied so far this year, but they actually also expect to show the strongest profit growth. And what we saw yesterday with Netflix and Tesla, when that didn't deliver, overall, just to give you some statistics, the pullback in the Nasdaq, it lost $400 billion in market cap just yesterday. So next week, and given all of the central bank action that's lined up, it could be a pivotal one.
Yes, again, chaotic. Sagarika, absolutely chaotic. Sagarika Jaisinghani there, helping us prepare for an interesting day and an interesting week ahead. All right, over here in the UK, Prime Minister Rishi Sunak suffered a major political blow this morning. Ahead of a general election that's expected next year, voters rejected his party in 2 parliamentary elections in England. Joining us now is our UK correspondent, Lizzie Burden. Lizzie, how big of a deal are these results?
Well, he's had 2 thumping defeats, Danny. He's lost Selby in the north to Labour, which is embarrassing because of the 3, it's geographically closest to his own seat in North Yorkshire. But he's also lost Somerton in the southwest of England, which was by an even bigger swing than Selby. That's gone to the Liberal Democrats. So it illustrates the challenges from 2 different parties at 2 different ends of the countries. However, he was spared a whitewash because they have managed to hang on to Uxbridge, which of course used to be the seat of the former Prime Minister Boris Johnson. That might have been more to do with a row over ULEZ, the ultra-low emission zone here in London that the Labour Mayor of London has been talking about extending. So it might be more local factors there. In any case, it illustrates just how difficult the road ahead for Rishi Sunak is going to be as we move towards the general election next year. Bloomberg understands that's going to be November 2024, which is the point at which the Prime Minister hopes the economy is going to be looking a bit better. But there was some analysis from the ultimate polling guru in the UK, John Curtis, today. He said, by the looks of these results, it seems that there hasn't been much electoral improvement by replacing Liz Truss with Rishi Sunak.
A lot going on the political front. Let's also get a little bit of your take on the economic front as well. We got retail sales from the UK this morning getting a big boost thanks to a hotter June than expected. Walk us through that data.
Well, an analyst, they put it in a note to me this morning, UK consumers might have just bought themselves a bit more mortgage pain because these figures speak to the resilience in the UK economy. We did have that lower than expected CPI print the other day, but the figures strengthen the case for more Bank of England hikes. That's what economists and markets are expecting. Bloomberg Economics say that those hikes will mean the UK economy faces a recession. And indeed, we had other figures this morning from GfK, a survey showing that consumer confidence slipped for the first time in 6 months in July. So that suggests a softening in the economy in the months ahead, a difficult backdrop for elections in the UK for Rishi Sunak.
Lizzie, thank you very much for that update. Lizzie Burden there, our UK correspondent. Coming up, don't miss our interview with Sarah Cardell, Chief Executive of the UK's Competition and Markets Authority, as we track the Microsoft Activision deal. And we're also going to get caught up with Coco Agabloa, SocGen Global Head of Economic Research. So much to discuss later this hour. This is Bloomberg.
What's the best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes, yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. Season is here.
Decent start to earnings season.
We are heading into the meat of earnings season.
Bloomberg breaks the numbers first.
We have Bank America, we have Charles Schwab.
Tesla, Netflix, you name it.
They're heading in the right direction.
A record quarter of revenue.
With exclusive expert analysis.
What do they have to deliver to justify the rally we have seen?
Earnings are still going to be under pressure.
Is there a divergence that's really important to draw here?
The massive divide between Diamond and Fraser.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
Welcome back to Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Kriti Gupta is in New York. Now, wheat is headed for a weekly gain of more than 10% on fears that growing threats to the Black Sea grain trade would curb supplies. Joining us on this is Bloomberg's Will Kennedy. So, Will, already a pretty big pickup this week, but can it go much further from here?
Yeah, as you say, over 10% this week, which I think reflects the market's view that the events this week and the back and forth and threats from Russia and Ukraine mean that the grain deal is dead and that ships are going to stop coming out of Ukrainian ports with wheat and corn. But there's probably perhaps not that much more upside from here, because the broader picture is that the global wheat market remains relatively well supplied. Harvests look good, especially from Russia, which is one of the world's biggest grain suppliers. Another bumper harvest there, lots of exports, and that probably caps the upside and maximizes revenue from Russia from this move.
Will, you mentioned the really healthy harvest, and I'm interested to hear kind of the developments there. Of course, we know that the U.S. plays a big role in that in terms of exporting. In the last couple of weeks, we've also heard about kind of protectionism making a reemergence, not necessarily in the wheat space, but in the rice space, for example. How much of that is going to affect the commodity market as a whole?
Yeah, the rice news is important, Kriti. Clearly, rice is one of the world's most important foodstuffs, feeds billions of people in Asia, especially, but across the globe. And it is a matter of concern, and perhaps one of the bigger pieces of news in the food market this week, that India decided to ban some forms of rice export, there may be more curbs to follow, and that if that trend continues, if we do see a rally in rice prices, that perhaps could be a bigger food inflation story, a bigger hunger story than the events we've seen in the Black Sea this week, important though they are.
Well, one of the other stressors on agriculture price has been the price of energy. And right now we're grappling with a heat wave. I mean, if you live in Sardinia, I really am concerned about any of our viewers who are there. How does that feed into this overall picture if we're potentially looking at more air conditioning usage?
Yes, right now in Europe, the gas price is relatively restrained, but clearly as a long-term trend, more and more cooling means more and more electricity to demand, and in the short term, some of that gap can be filled by renewables, and we're seeing a lot of solar power deployed around the world, but some of it will have to come from natural gas, and what that means is you may be using more natural gas in the summer than in the past, and that sort of gap that historically you've seen between demand in winter and demand in summer closes a little bit. Right now, the European gas prices edged up a bit recently, perhaps on concern that Russia may seek to influence the market again, you know, looking at what they've done with wheat. But demand from cooling hasn't been that noticeable. But I think you're right, Danny, to say that it's a longer-term trend that we need to watch.
Will, you were talking about kind of the natural gas story. Square that then with the oil story. I know stateside here, there is this kind of divergence in terms of how much utilities use natural gas relative to oil based on just how they're priced. Talk to us about the dynamic internationally between the two.
Well, the oil market remains in a gentle upswing. We have seen a fourth week of weekly gains in the oil market. I think in the oil market now what we're seeing is a tug of war between the supply situation where Saudi Arabia has instituted that 1 million barrel a day cut in July and August. We're finally seeing signs that Russian exports may be starting to fall, and they're following through on their commitments. But that's balanced between by weak industrial demand that we're seeing in China, concerns over the macro picture in China, and some weakness more broadly in the petrochemical sector, Kriti. So we're seeing those two things trying to balance each other up. Right now, to some extent, the the supply picture seems to be winning out, and prices are gently creeping higher.
Well, that's really interesting. I mean, what happens next week then when we get a flurry of central bank action? Does the macro picture take back control when it comes to oil prices?
Yeah, I mean, the other thing that you've got going on with oil prices, of course, is the dollar, and one of the things that is driving oil higher, there tends to be this inverse correlation between the dollar and oil, and as the dollar has fallen away, as people have thought that maybe the tightening cycle is ending, that's one other reason to drive oil prices higher. So it'll be interesting to see if that dynamic follows through as central bankers take those decisions next week.
Yep, there's a lot happening next week, Will. Will Kennedy there from our commodities team, thank you so much. All right, coming up, it's the news all anyone cares about. It's Barbie, and Oppenheimer. It's because I'm used to saying Barbenheimer. I can't say them separately, apparently. They're both hitting the big screen today, potentially making this weekend the busiest for theaters since the pandemic. We're going to have more on that for you next. This is Bloomberg.
Prime Ministers, 4 Chancellors, an energy crisis and the soaring cost of living. It's been a hard year for startups, but even in the toughest times, some of the best ideas are born here in the UK. Bloomberg UK's Startups to Watch will profile the brightest companies under 10 years old, with the winners unveiled at the Bloomberg Technology Summit in London in October. Get your entry in by the 7th of August for the chance to have your company profiled and to attend unique networking events. Good luck, and we hope to see you there.
For the first, call it 18 years at Chipotle, this was you come into Chipotle along the line, you interact with the crew, and you customize your meal. We've got this separate make line, and it's digitized, and so the orders come in, they're really kind of staged so that if you say at noon, I want to come in at 1 o'clock, we hold that order, and we will send it to the crew like maybe 10 to 1,
right.
So it's ready right when you pull up your car.
How do you manage these kind of two different staffing needs, right?
Yes.
And making sure you have the right amount of people
Yes.
at the right time.
We spend a lot of time projecting sales. A lot of it is, it's part art, part science. We're trying to bring more science and more AI into it. Because if you get the right sales projection, then you know exactly what your staffing needs to be. So if you get the sales right, you can get the entire restaurant staffed perfectly. With just a couple people, our average restaurant now does about over $1 million per restaurant in digital sales. DOJ or other authorities
could face bigger challenges next.
Was going to keep Ray World Cup. This is a 3.
As the economic picture does. The OK is getting ready to make a decision.
The names that move markets are on Bloomberg.
Concentration in industry after industry after industry is a threat to our economy. It is a threat to innovation, and ultimately often leads to price gouging, whether it's consumers or the government. I believe in the power of markets, but they only work if we enforce the rules that keep competitors going rather than monopolists.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Danny Berger in London. Kriti Gupta is in New York. This weekend, it is Barbie versus Oppenheimer. There's plenty of evidence that people around the globe are going to see both of them, are going to see two of the most anticipated movies of the summer. Total domestic box office receipts are tracking well over $200 million for the weekend, which could be one of the busiest for cinemas since the pandemic, according to Box Office Pro forecasts, as hype for films explodes. Kriti, my question for you is, do you see a double showing? And if you do, what order do you see it in?
That is really tough. And I gotta say, for me, I'm a Mission Impossible fan, so I think I'm gonna go see that one first.
Oh.
I'm gonna throw a third option in there, but I have to say, look, you gotta see Barbie first, right? You can't have kind of the weight of Oppenheimer followed by Barbie.
Wait, no. Kriti, you gotta do it the other way. Oppenheimer will bring you down. You can't end on that note. You end on Barbie. So you leave the theater saying, oh, that was lovely.
Okay, so it's safe that you and I aren't seeing this double feature together because our orders are completely different. But Danny, I think it's also worth talking about just how this was really coming about, because in this era of Hollywood, we of course know this return to the theater is something that is a bit rare. They've really had kind of their work cut out for them. And it's also coming at a time when the strikes in Hollywood are kind of affecting the marketing campaign. You know, the likes of Margot Robbie, Ryan Gosling, and others who are starring in the movie have said, look, we support the unions, and that's really eating into this massive marketing budget that Mattel has for the film.
Yeah, even to the point where during the Oppenheimer premiere here in London, we had the stars walking off of the premiere. They left and they said the strike has started, because the strike started literally while they were on the red carpet. They all left. And so there's some degree, it does feel like this is kind of the last big narrative we're gonna get for some time, unless those strikes get figured out. So maybe that adds to the rush of going to the cinema. I'm unsure, Kriti.
Yeah, we'll have to certainly see when those full numbers come out in, say, like a month or so. The labor story is certainly important, but so is kind of the Mattel rebound. Look, this is Mattel Films' first actual film. This is the part of the business that's only been in play for about 4 years, so also a big experiment on the toy maker's side.
Yeah, it definitely is. All right, we're going to get away from the world of toys and movies. Up next, we're going to be talking markets with SocGen's Koku Agabloa. This is Bloomberg.
venture capital. It's been volatile. From bank crisis anxiety to AI exuberance, Caroline Hyde and Ed Ludlow chat with the biggest names about the latest tech trends.
Is AI going to dominate the earnings narrative for this sector this week?
I think we're seeing opportunity and potential platform shift that we haven't seen in a long time.
If you're a company today and you're not embracing the changes that are taking place with AI, you're going to be behind.
How do you prove to the investor base that you haven't just tacked on AI to make yourself sexy?
It's very hard to differentiate if you're not experienced with AI.
The startup stories.
We think this is a watershed moment for technology.
Certain categories are more exciting than others. Right now, obviously, generative AI is a category that is very exciting to startup founders, customers, and venture capitalists as well.
So what we are seeing is a new area of opportunities for new founders to come and change the industries that matter.
And the real talk on realistic valuations.
Some of the best opportunities are sitting right in front of us.
How do you discern which ones are good on the marketplace right now?
I think founders have woken up to the reality that taking on more money at higher terms doesn't necessarily play to their benefit in the long run.
How do you actually invest?
Follow the VC money on Bloomberg Technology, the only daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West, only on Bloomberg Television.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. U.S. markets are on high alert. Investors juggling disappointing earnings on the one hand, rate bets, and an out-of-cycle rebounds the NASDAQ 100 on the other. Plus, a pivotal week ahead for central banks already shaping up this morning. The yen falls on a scoop that the Bank of Japan sees little need to act next week. And in the UK, Rishi Sunak suffers a dramatic political upset while the country's Competition and Markets Authority flexes its antitrust power. We speak with the CMA CEO, Sarah Cardell, this hour. I'm Kriti Gupta in New York with Danny Berger in London. Look, Danny, they clearly didn't coordinate when they set up these tech earnings alongside a lot of these central bank decisions, factor in the scoops that we're getting, and it creates a lot of cross currents for the markets.
It really does. I want to get Microsoft, Kazuo Ueda, Fed Chair, Lagarde. I want to get them all on the phone and say, guys, just take a break, please. Just leave us alone. We have so much to deal with. So there's a lot of cross currents right now at this moment. Now, on the earnings front, when it comes to Europe, it's also tech, Kriti, that's moving things around here. Europe Stock 600 just barely able to hold on to gains because it's being dragged down. The tech powerhouse of Europe, SAP, the cloud software company, they had earnings after the bell yesterday. They underperformed, those shares falling some 4%. A lot of volatility in FX and rates. It seemed to have calmed down in the last 30 minutes. So we got UK retail sales data hotter than expected. The immediate reaction was a strengthening of sterling. That's come back into the trend we've seen this week of weaker sterling post-UK CPI. German two-year yields, that was a bigger rally. Then we flipped to losses. Now we're kind of unchanged, kind of rallying. It's a lot to digest, Kriti, when you're also looking at, okay, now the BOJ is standing pat.
Well, it's certainly a lot to digest, and I think a lot of the sentiments that you're seeing in Europe are really translating into the U.S. session as well. Already it's 5:30 a.m., and you're seeing that dynamic play out. The NASDAQ 100 futures, for example, higher by 0.3%. Again, it's that tech story that you were just pointing to in the European session. The idea of perhaps a little bit of rebound, a little bit of repositioning ahead of the NASDAQ 100 rebalance on Monday, but also just month-end rebalancing anyway. So a lot of folks perhaps buying in after that big sell-off we saw yesterday as well. So certainly something to keep an eye on in terms of the momentum we're going to see in the tech space. But look, the bond market, the FX market on a completely different page. The BOJ, the highlight of this morning. Dollar yen is where we're catching our eye. 141.78 keeps fluctuating, but higher by about 1.2% when it comes to dollar strength there. What's interesting is that we're not seeing the Japanese yen test those lower levels yet. And that's really important because as we go into the BOJ decision next week, look, the scoop certainly moved the market. Didn't move the market as much as perhaps we would have expected 2-3 months ago. maybe not. And that's going to be something we digest in just a moment. The bond market, as you would usually take its cue from something like that, right now, not so much. 385 on the 10-year yield, kind of virtually unchanged there. And of course, Danny, our courtesy check on the commodity market, Brent crude trading at about $80 a barrel.
Oh, not just a nice thing for you to do today. That's a pretty big move, Critty. Finally, oil playing up. All right, here's the actual big move, though. Let's be honest. It is the yen. It's what Critty and I both mentioned, a great scoop from the Bloomberg team in Japan, that the BOJ likely is not going to be moving next week. There won't be tweaking yield curve control. They say the bond market is functioning fine. We don't want to signal to the market that we're tightening things from here on out, so we stand pat next Friday. Let's bring in Koku Agablua now, Global Head of Economics, Cross-Asset and Quant Research at SocGen. Koku, I gotta be honest, before that Bloomberg scoop, I was willing to put money on the fact that we'd get a YCC tweak, and this is another great example of why I have the job I have now, and I'm not indeed a trader. But what do you make of this, the fact that the BOJ says, no, we don't need to act yet?
Yeah, I mean, to be fair, Danny, this is we were also in the same camp. We were expecting the widening of the fluctuation range permitted for 10-year JGB yield, essentially going from plus minus 50 basis points to 100 basis points. So we've essentially extended our call for that to occur in September. It is quite interesting because it really shows how determined the Bank of Japan are in making sure that they don't slip back into a sort of deflationary or disinflationary spiral. And it is interesting because if you look at the rest of the world, everybody's sort of seeing a disinflationary pressure with, headline CPI rolling over, even though core remains the problem. But I guess when it comes to Japan, they've learned from history and really being consistent with their strategic goal of making inflation sustainably higher, as opposed to creating a mean reversion back to its history.
One of the things in terms of this overall bond market rally, Koku, that could have derailed it would be any tweak to YCC. That seemed to kind of be the big unknown factor. If that's no longer an unknown, if there's less volatility now around the BOJ's decision, is this kind of an all clear to see that bond market rally continue?
Yeah, probably. But although it will also depend on how the U.S. Treasury yields behave, because when you have sort of upward pressure on yield, it typically has put upward pressure on JGBs as well, because you get selling of JGBs and sort of attraction towards U.S. Treasuries. But with a lot of that inflationary pressure easing and fears of a recession, that is, by the way, not happening yet, at least when you're looking at the equity markets. I think that's clearly going to ease the sell-off and create more bullish momentum in the bond market.
Koku, speaking of that bond market, a couple months ago when we were again talking about this yield curve control story, it felt like there was this sentiment in the market that we are right on the cusp of something breaking. It feels like that sentiment has since faded. Talk to us a little bit about this idea of the cues that the rest of the world are taking from a bond market that maybe isn't necessarily as worried about the BOJ, despite them sticking to the same framework they had a couple months ago.
Well, I think the world has changed to some extent. If you go back to a few months ago, we were essentially saying that that central banks will have to tighten and raise interest rate by a lot more than what was priced by the market, simply because we saw core inflation being pretty strong. You have household and corporates having developed a sort of natural immunity against interest rate because companies have refinanced themselves out to 5 to 10 years and therefore less sensitive to higher interest rates. And then you have a household benefiting from excess savings. At the peak, it was close to $2.5 trillion in the US. And at least the recent sort of CPI core shows that there's a gradual slowdown in core, and that's quite reassuring. And therefore, the amount of tightening and uncertainty and upward pressure on yield in the US bond market has sort of eased, and that's created a sort of contagion across the curve. I mean, the best example is the UK, the gilt market as well. The latest data were essentially softer. That created a weakness in the sterling, even though retail sales recently are back higher. So that's created a lot of uncertainty. But I think generally speaking, the sentiment is a lot more less fearful of another massive way of tightening.
Well, I love that you mentioned the currency space. You must be saying something very interesting and very newsworthy given how many messages you are getting immediately at the moment. Very popular, clearly, at 5:30 a.m. New York time. Cuckoo, talk to us a little bit more about the currency picture here. At what point do these rate hikes that you're continuing to see with the ECB, the BOE, end up becoming a weakness for currencies in Europe right now? When do we see that kind of rate differential dynamic switch?
I think the strength in the euro dollar, I mean, it's ultimately a dollar story because clearly the Fed has been pretty aggressive in tackling this inflation outbreak that we all observed as a consequence of this massive fiscal and monetary stimulus to save human lives after the COVID crisis. And today we're starting to see peak interest rate at roughly 5.5 in the US, and we think they'll pause going forward. But the ECB and the Bank of England are essentially behind the curve. And one of the key reasons to bear that in mind, to bear in mind, is the fact that historically it used to be a lack of demand problem, where demand was constrained. Today, what we're seeing is a supply that's constrained. We have demand at way above supply, and therefore you need to create a lot more demand destruction, a lot more unemployment to get inflation down. Currencies are going to follow interest rate differentials, as you mentioned, and therefore we see more upside on the euro versus the dollar. And we think the dollar is essentially going to be on a downward trend going forward, and the sterling and the euro will have to play catch up in dealing and fighting inflation, particularly on the core inflation side.
Coco, I just want to know what everyone is IBing you right now. I hear it going off. Are they agreeing or disagreeing with you? What are those messages you're getting?
Well, it's probably agreeing to disagree, but a combination.
There we go. Coco, I mean, come on. That's what we have you on, the controversial topics. Look, I love this from your notes. Momentum or fundamentals, that is the key call. What is it, Coco? Is this a market based on momentum or fundamentals right now?
Well, this is a very good point. There's a huge dissonance and battle between the fundamentals that looks pretty strong. We can think about greedflation, for example, so this ability of corporates to pass on higher prices by more than is warranted, and that's why we see profit margins at levels not seen for the past 15 years. And yet you are also seeing this massive tightening in liquidity, higher interest rate that is supposed to create a slowdown in demand. And yet you have this dissonance between the bond market on one side and the equity market. So there's a bit of a fear of missing out, so to speak. And we see a lot of positioning that was pretty bearish in equities at the beginning of the year because of that whole recession rhetoric. And that's why there's a momentum to rebalance multi-asset portfolios back into a more balanced equity bond allocation. And we see a lot of investors overweight bonds because that's sort of the asset class you want to be in if you expect a recession. So I think the jury is still out as to how severe the recession is likely to be. Our house view is that we won't see a recession in Europe, and we will see a mild recession in Q1 of next year for the US, simply because, to finish on this point, it takes 3 to 5 quarters for interest rates to hit the economy. And because of that immunity of household and corporates, it will take a bit longer than usual to create sort of the normalization in core inflation that central banks are desperately looking for.
Certainly a lot to digest in this next week. SocGen's Cuckoo Agboa all over that story. We thank you, as always, for joining the program. Coming up, we go from the macro to the micro. We're going to speak to Sarah Cardell, Chief Executive Officer of the UK's Competition and Markets Authority, a conversation you do not want to miss. This is Bloomberg.
London will stay a financial center. It will stay our EMEA hub. We'll just have a rebalancing onto the continent. And actually, the numbers of who has moved across aren't that big. So it's sort of in the 200 level. And if you think about 15,000 people, that's sort of not that material. And so I do think both will basically continue to grow and continue to be very relevant. What will change, though, and the big thing that's changing, is actually the risk-taking is what's going to move. And so we've historically had risk-taking in the UK. That risk-taking and the assets that go with it, not the people alone, but the assets that go with it, that's the next phase of what we're now moving into. And that will be a material change.
The names that move markets are on Bloomberg.
China has seen slower growth than they expected. Many countries do depend on strong Chinese growth to promote growth in their own economies. For the United States, growth is slowed, but our labor market continues to be quite strong. I don't expect a recession. I think we're in a good path.
Nobody covers business like Bloomberg, your global business authority.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Danny Berger in London. Microsoft's $69 billion acquisition faces one last hurdle, the UK's CMA. The deadline for the deal has been extended until October 18th, but no proposal has been put forth just yet. In an interview with Sky News, the CEO of the Competition Markets Authority, Sarah Cardell, said, quote, "The ball's very much in Microsoft's court." She joins us now for more on the deal. Sarah, a pleasure to have you on the show. Thank you so much for joining the program. Look, let's get straight into the nitty-gritty of this deal. A lot of questions about what a remedy that would suit the CMA might look like. Talk to us a little bit about the possibility of a divestiture. Is that something that the CMA would approve should Microsoft propose that?
So I think the first thing to say is that at the moment, our decision on prohibition stands. We investigated very thoroughly the deal. We found that there were serious concerns in relation to cloud gaming, and the proposals that were put forward by Microsoft at the time did not resolve our competition concerns. So Microsoft have indicated that they are considering how they might restructure the deal in a way that resolves our concerns. And really, as I say, it is up to them to come forward with a proposal that satisfies those concerns. And to be clear, it needs to satisfy those concerns fully and comprehensively. So a divestment may be one option, but it's really up to them to come forward with a proposal that meets our requirements.
Sarah, some would argue that a divestiture is the only option, given that the CMA has been very vocal about a licensing deal, something that the that the federal courts in the US and the European Commission have actually approved. Talk to us about why perhaps a divestiture is a better alternative to a licensing deal.
So the thing that really matters here is making sure that this market remains open and competitive. We know that when we're looking at cloud gaming, it's a new, emerging, dynamic market where we want innovation to flourish, to thrive. We want a whole host of different companies to be able to compete effectively in that market. And I think it's really important to focus on the outcome there rather than precisely how that might be achieved. As I say, it's not really for the CMA to design that for Microsoft. It's for them to come up with the proposals that meet our requirements. But it's very much about keeping open the dynamics of the market.
I mean, there have been criticisms, which I think are worth clearing up. This idea of a possible rethink comes off the back of a change in the US, off of Europe deciding this deal was okay, and from some vocal criticism from the likes of Jeremy Hunt. What do you say to those who say this rethink is due to outside pressure?
I say absolutely not. We were very clear with our decision that there were serious concerns from this transaction. And as I say, that the remedies that were put forward by Microsoft at the time did not satisfy, did not resolve those concerns. And the way UK merger control works is that in the absence of a proposal that resolves those concerns, we have no choice but to prohibit that transaction. Now, it is up to Microsoft if they want to come up with a proposal that they think will address those concerns. That needs to be in the form of a restructure. And if they do, we would consider, for example, whether that constitutes a new transaction that requires a new investigation. And I should say that this will need to go through a full formal process. So there will be a process of consultation, an opportunity for third parties to put their views on anything that comes to us.
What have you heard from Microsoft in terms of submitting a material change? You say that they have. What is the material change that they've submitted?
So it's perhaps helpful to distinguish two different elements here. So I think there's a lot of perhaps a little confusion, a little complexity to the process. What we have at the moment is the prohibition decision, and we are in the process of putting in place the final order that implements that prohibition decision. It is, in all processes, open to parties to put forward an argument that there has been a material change of circumstance. That is not necessarily the route that we would consider when we're looking at any new proposal. We've also indicated that if there is a new structure on the table, that may well constitute a new transaction that requires a full new investigation.
Sarah, is it still possible that the CMA doesn't accept any new proposals from Microsoft? I mean, how committed is your organization to actually seeing this deal through as opposed to stopping it completely?
So the CMA is committed to make sure that there are no competition concerns resulting from this transaction. That is our legal responsibility. That is our obligation in making sure that markets remain competitive. We will consider any proposals that are put to us, but those proposals need to meet those concerns in order to secure any way forward for the transaction.
So to be clear, it is still possible that the CMA doesn't approve any of Microsoft's proposals if it doesn't meet your qualifications?
It is.
And I'll leave you with this final question then, Sarah. When it comes to the precedent that this is setting for other deals like Broadcom, VMware, Adobe, Figma, for example, even Adobe and, Amazon iRobot, these are deals that the European Commission has gone on much, much harder than the UK has. When you talk about the broader tech sphere, why is Microsoft set apart from some of these other broad tech stories?
So I don't think it's the case that there's a particular approach on Microsoft and a different approach on other deals. There are many, many transactions where we take a very similar approach to the EC and to the US. And indeed, of course, it's important to remember that we had very much the same concerns about the impact of the transaction as the European Commission did. For example, if you look at the Adobe case, that's a case that we are still reviewing very carefully through our phase 2 investigation. So it's by no means the case that we're singling out Microsoft in any way.
We'll certainly keep an eye on that. Sarah Cardell, Chief Executive of the UK's Competition and Markets Authority, thank you as always for joining the program. And of course, worth getting a quick check on these shares. Microsoft shares higher this session by about 0.4%, ticking, of course, as we were speaking to the CEO of the CMA. Their Activision Blizzard, on the other hand, pulling back a little to the tune of 0.4%, trading just shy of $92 a share. Remember, $95 a share was the offer price. We are going to be keeping an eye on all of those moves, as of course the moves in the broader tech space as well. Coming up, we get a checkup on the financial health of the U.S. consumer as earnings season ramps up next week. Tech, of course, a major part of that story. Stick with us. This is Bloomberg.
Steve's ability on the course may not be etched into any record books, but following him around, it's clear that it's not for lack of trying.
Jeez.
We were constantly hustling behind him as he caught up with executives in the portfolio companies and reminisced with former and current players.
He was a day trader. He taught himself self-made day trader. Yeah. And so he's on the bus after a game in New England, and he's day trading on the bus, and Bill Belichick sees him and cuts him on the spot.
In many ways, it's a convention, right, of the people that I don't see maybe once a year. And so it's kind of all come together. My firm, our charity, fundraising efforts, and then the friends that are around. My dad and my brother, it all happens right there as a confluence of all these parts of my life that have found its common center.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Kriti Gupta in New York with Danny Berger in London. The consumer set to be the star of this earnings season. Next week, we'll bring us a report card on consumer health from corporate America, as well as crucial economic data. Simone Foxman is all over that story. She joins us for more. Simone, walk us through the big themes in focus for next week.
Well, food and grocery. I mean, we have an enormous list of various companies reporting, but food and grocery, one of the things I'm focused on. We'll see earnings from the likes of Colgate, Palmolive, Kimberly-Clark, P&G. We've been talking about the sort of trade down stories as consumers move to cheaper products, but one of the things that's come up in recent weeks is that consumers just might not be buying as much at all. That's what we heard from the ConAgra CEO, consumers simply buying less. There's also been various data reports suggesting that sales of things like toothpaste, laundry detergent, toilet paper are going to be down 3 to 4% a year. Another theme we're going to be watching on the food front is the idea that food at home, so the kind of groceries you buy to eat at home, those prices have suddenly sort of stabilized, while food outside the home at restaurants and the like, that's continued moving up significantly higher. That may be something we see in the earnings of McDonald's, Hershey, Coca-Cola, Chipotle.
Hang on, Simone. Did I hear you right that toothpaste and did you say toilet paper sales are going to be down? Wait, what are people going to be doing?
Yeah, I mean, I think the thing is, the idea is that people have some existing inventory, and so maybe that they're not buying toilet paper, they just are using what they can and sort of spending on other things, including experiences. We'll also get sort of a check on that when we get some of this data out, those GDP numbers, personal consumption. I think that's a signal that we're going to be watching for sure.
All right, so that's the micro. Let's zoom out a little bit, talk about the macro, because then we also get a lot of eco data as well, which will give us a little bit more perspective. Walk us through that.
Yeah, I mean, as I was talking about that personal consumption piece of GDP, that's really what held up GDP, caused us to come in a bit higher than anticipated last quarter. Of course, we'll see broader things, consumer confidence, there are various measures coming out next week, and of course, that important Fed decision. Another thing I'm watching too, and this will play out in earnings as well, is housing. We get our latest number on new home sales in the United States next week. We've seen a lot of strength in the housing market. Analysts do expect this to fall a little bit, but something we're also going to be watching in Sherwin-Williams, some of the other home improvement names.
Yeah, so consumer, eco data, central banks,
so much.
Yeah,
so much.
No one's going to sleep at Bloomberg next week. Simone Foxman, thank you as always. That does it for Early Edition. Surveillance is ahead with the CEO of Arsenal. Stick with us. This is Bloomberg.
politics
We're not going to be relying upon countries whose values we don't share.
to the world of business.
It's all about corporate power in the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We couldn't be more excited what's in store for you.
How long will it take? How many years? Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join host Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee
The
Langs.
door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
That really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure. With two more potentially to come.
I'm willing to have this battle. It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers
Right.
that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority. Markets countdown in Europe. From the financial centers of the world, Bloomberg Markets European Close with Guy Johnson in London and Alex Steele in New York. Real-time numbers, real-time analysis. Weekdays.
Right now, it's all about earnings. So far, I think they'll come in fine.
It's a difficult market. This isn't an all-in type situation. This is being selective about the areas you want.
We still have a lot of money flowing through the system. That is a challenge for inflation.
We're not out of the woods by a long shot.
At some point, we do think the recession is going to come.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Let's get you to the weekend, live from New York City this morning. Good morning for our audience worldwide. This is Bloomberg Surveillance on TV and radio alongside Tom Keene. I'm Jonathan Farrow. Your equity market slightly positive by 0.2% on the S&P 500. Difficulty for the Nasdaq in the last 24 hours. Biggest one-day drop going back to February. Disappointment for the likes of Tesla, the likes of Netflix as well. And TK setting us up for next week. Not just a Federal Reserve decision on deck, but also just around the corner. Big tech ramping up.
Big tech earnings, and it was really interesting to see after how many days up for SPX, and SPX still, frankly, and Dow doing well here within the NASDAQ pullback. You really wonder. It was a one-day OMG, Netflix. And what was important is it wasn't about 10 a.m. John, you haven't noticed my look yet on radio?
No, I've noticed it.
Okay, we'll get to Barbie. We're in the theme. Did you see Francine Lacroix's dress today?
I didn't.
She looked like a pylon out at Heathrow coming in. She's got the Barbie pink thing going.
Is that what we're doing going into the weekend? I didn't get the memo.
Yeah, Mohammed's showing up.
Is this
with a
close to
suit.
pink? Not really.
Yeah,
that doesn't work.
No, it doesn't work. El Arian will have the speed.
Mohammed's wearing a pink suit.
Mohammed, yeah, he's gonna, he's like Ryan Gosling.
Does Mohammed know that?
Yeah, he doesn't know it yet. Anyways, I'm looking at not what happened yesterday, but what happened yesterday afternoon. I thought it was really interesting how NASDAQ gave way later in the afternoon.
And the Treasury market sold off.
Yeah.
And yields spiked higher. And that really started at about 8:30 Eastern time yesterday morning when jobless claims came out, Tom. Downside surprise on claims, and any talk of a Fed pause, at least going into next week, put on ice.
Well, some economic surprise data there, and again, into the Fed meeting, which I think, do we assume it's a layup? I mean, it's just a given 25 basis point snooze fest, right?
And then what? And then what? It's the then what that's got everyone's interest, Tom, next week.
My other idea here, John, as we approach, the summer, the heat of it with Barbie and Oppenheimer, afterthoughts going.
Can't get tickets.
Both movies.
Oppenheimer,
Afterthoughts.
The IMAX at Lincoln Center is just ridiculous. Sold out for weeks.
Yeah, well, it's the middle of the summer, and also, this is the Friday, folks, where Jackson Hole is upon us. This is the first day where I'm like, okay, we're going to Jackson Hole in August, and maybe this year Powell will say something that will adjust the zeitgeist.
Are we going to see more data that backs up that disinflationary story? Tom mentioned Mohammed Al-Arian joining us in about 2 hours' time here in New York. around the table. We'll catch up with the Arsenal CEO as well. Arsenal Football
That's the
Club.
only reason Mohammed's
Looking forward to
here.
that.
He's like,
Going into the start of the season in early August. And Mohammed is a QPR fan, TK.
He's a QPR fan, but that's
He's
like...
got things to say
That's
about...
a league below. Like Sheffield United went up, right?
That's a different league and a different side of London.
QPR's not in the same league as Sheffield.
Different league and West London. And then you've got Arsenal, North London, next door to your Tottenham Hotspur.
Yeah, good morning to all of you in London. And my entire knowledge of Arsenal is the entire cigar bar at the Lanesborough Hotel is for Arsenal.
That I can believe. That I can believe. Have you got tickets for Barbie then?
No, I do not. And
You're just wearing the bow tie.
I'm the one guy that probably doesn't care, but I was on strict orders. Don't come home unless you got it. For those of you on radio, I'm styling the King Charles suit. This is Charles wore this yesterday.
Is that right?
Some river cutting, and I was told I have to wear a pink bow tie.
For the record, I don't think you're the only guy not interested in watching that movie this weekend. Equities right now on the S&P just about positive by 0.2% on the S&P 500. Not just the Federal Reserve decision next week to look for. Listen to these earnings. Tuesday, Alphabet, Microsoft. Wednesday, Meta. Thursday, Amazon. The following Thursday, Apple. Big tech, Tom. Big week for big tech.
Yeah, it's good, important here. Our first conversation of the morning here is really going to focus on the global ramifications of big tech. I just feel, John, top to bottom, this is a key indicator of each company. It's just like the big banks. You can't conflate them all together. They're not all like Netflix. You know, they're all a different story. I got to admit, I'm most focused on Apple, but that's just my own bias.
Netflix, worst there 2023 in yesterday's session.
Is it a business?
Tesla, worst since April.
You know,
they're making money as a business, Tom.
I can't. No, they're making money, but is a general statement. Somebody had this out brilliantly yesterday. I'm sorry, I can't quote it. It's too early in the morning. Is streaming a profitable business?
For Netflix, yes. For
Everyone
the others,
else,
it might be a struggle.
I don't, I have trouble with this. I mean,
well, we said that about Netflix for years, didn't we? And then look at them now.
And they've improved. I mean, I'll give them that. I'm sort of speechless because we're getting over our conversation yesterday with Daniel Ricciardo. That went global.
That was very cool.
It was very cool.
Good luck to him at the weekend.
Yeah.
Weekend full of sport. We'll bring you some of the highlights of that on Monday. Can't wait. Virginie Massenov joins us now.
This is important.
Global CIO for equities at Allianz Global Investors. Virginie, thank you for being with us. I think we have to start with tech and lead on that going into next week, particularly following the weakness yesterday. Do you see the earnings validating the big gains we've seen in 2023?
I think you have really three themes that you need to think about, and the earnings, if you want, are a data point on those themes. But one is valuation, second is regulation, and third is megatrend versus fad, right? On a valuation basis, you're at a 10-year high on an absolute and relative basis. If you look at trends, clearly you have tech permeating all sector. That's what I call digital Darwinism, right? The second trend you have is phone and PC versus AI. And the third trend is cyber. And I have to say, I still see a lot of potential mega trend in cyber, a lot of spending happening.
Virginie, it's wonderful to have you here, and I think it's incredibly well-timed. Folks, Virginie Massenov, not only with bulletproof financial cred, but how about a degree in Mandarin from Paris Dauphine as well? You've got a global sense like nobody I know. Virginie, I want to know how Europe, and frankly how Asia, but how Europe competes with big tech America. I go in search of Apple in Europe or Google in Europe. I just don't see it. How does Europe compete constructively with American big tech?
It's really interesting because clearly it's the shovel versus the gold, right? Of course, you have semiconductors, which are an enabler. But in terms of the large companies, you'd have to look probably more towards Asia. And what's really interesting to me, if you think of China and the rest of the world, so US versus China, you really potentially have a bifurcation of tech standards that is in the making that will and have an impact on the rest of the world, right? So a very important question, but I have to say Europe doesn't have the same contenders.
Europe doesn't have the contenders. China has a contender, which is the instabilities we see there now. So many of us can't make the translation over to what you see domestically. Tell us what you see with your knowledge of the language and the culture, what you see in China and how it redounds back to the United States.
Thank you, Tom. That's a really, really great question. So what you have in China right now, you could say a transition, part of which I call China phase 3. China has such a large economic footprint now that it comes with some geopolitical power, and that phase 3 is developed, in the past 5-7 years. Clearly, given the trade issues that we've seen and the advance that China has in artificial intelligence, there is this bifurcation, that digital Darwinism, if you want, that competitiveness that's taking place. And we're going to see a lot of put around new internet companies. Internet companies in China could be a very large employer. And we know we have a high unemployment rate among the young people. Investing in infratech, investing in technology, that is the game that China is planning for in terms of competitiveness for the next 10 to 20 years.
Some people are nervous about putting capital to work over there. You're aware of that, Virginie. Just a couple of years ago, there were people talking about how China had suddenly become uninvestable because of the unpredictable nature of policy setting at the top of the Communist Party. What would you say to those people now?
I would say that China has its own dynamics. It's very clear. It's not the US, it's not Europe. However, when you have the second largest economy in the world, that is very much still progressing dramatically, you cannot ignore it. And I think you have to be extremely selective in terms of stocks. We are finding a lot of innovation in China, and I think over the next 5 years, people are going to discover a lot of that innovation in very large market caps in the domestic markets, and you cannot ignore it. But you have to be very diligent in your research and your stock picking.
Allow me to bring in the time horizon a little bit more aggressively. You're pushing out 5 years. Let me come in and talk about the next 6 months. Do you see China being a headwind or a tailwind for growth over the second half of this year?
I think it will be a tailwind. The reason is that China will probably grow GDP between 5 and 6% in a world that is decelerating. So the question is, how fast is the rest of the world decelerating? Is the economic resilience that we've seen in the US clearly supported by all the packages that were put in place as well in Europe around COVID? How fast is that decelerating versus Chinese growth of 5%?
Virginie, Jean Ferrot, I like how I did that in French. Virginie, Jean Ferrot. Jean Ferrot. Virginie, John has been way out front with observing that French luxury owns the high ground. They have big tech like PEs. They've just done so well until recently, a little bit off the up. I would suggest you're wearing Bellman and Celine today. You've got a third rail on this. Do you look at French luxury as a sustainable value at those high PE multiples, those assumed growth rates, what those companies have done for France and for continental Europe?
It's quite amazing, actually. And we go back to branding, innovation, and really consumer appeal. And there, what the Chinese consumer, as you know, has been a very, very good client of a lot of the luxury brands. So I think it all depends on their ability to continue to innovate and to provide products that people are interested in buying. So it's not an end game. It's an ongoing game.
Virginie, this was fun. Thank you. Got to do this again.
Friday morning in the summer, Virginie Masseneau.
Of Allianz Global Investors. Going into the weekend, Tom, and going into next week. Not just the Fed, but earnings season for big tech.
She owns the high ground. She has lunch with Mohammed, and it's like, it's a polish. There are Claridge's in London.
We get breakfast with Mohammed this morning.
Virginie, Alarian and Masseneau at Claridge's in London. It's like the air comes out of the room.
Have you put your breakfast order in?
No.
Mohammed's buying this morning.
Oh,
didn't
really?
Get the memo, yeah.
Wow, yeah. Step up. My word.
Purchasing breakfast.
It's just, he's catering it in.
Very cool. I want to go through the calendar for next week again for big tech.
It's after Budapest.
On Tuesday, Alphabet, Microsoft on Wednesday, Meta, then Amazon on Thursday, then Apple.
What are they going to say about Threads?
You just want to talk about Formula 1.
What are they going to say about Threads? What's Meta going to say in the conference call?
We want a number, don't we? We want a number.
Oh, come on. It's a massive stiff. It's out there. People like me, we tried it. We looked at it enough. I don't want to do Instagram. I don't care about people's
So
Barbie.
You don't like it, so you think it's failed?
No, I don't think it's failed. That's too strong a language. But, they have clearly within the zeitgeist said, we don't want the news organizations to be part of Threads. Okay,
Is that a bad thing? I don't think that's a bad thing.
No, I'm going back to Twitter, where I can get something done with a huge network that you've got out there.
I spend less time on Twitter now.
I do too. Yes, totally agree. Totally agree. Yes, I did.
Used to learn something from the conversation, and now just not so much. And I find that a lot of people who used to follow Tom used to provide really valuable content aren't posting it anymore either. That's just my personal experience, for whatever that's worth.
That he can learn, particularly from the woman from NBC, Linda, that's coming in. And I think they can get them. I'm optimistic they can get the magic back. And maybe I'm foolish.
Well, he's fiercely intelligent. I agree with you.
Yeah.
And money talks. Money talks, Tom. It's not a charity. They've got to make this work.
Public note, I'll say this for 15 seconds, John. I was fished yesterday, just like you read about.
How does that work?
I was fished. I got an email up on my screen at home, had the martini in my hand, and, I'm looking at the screen, and it looked just like it was from PayPal. And I called the number.
One of those.
And I got the boiler room and wherever, and I realized after 20 seconds this was not good. And shout out to PayPal. They were great about it. There's a whole phishing at paypal.com. Right. Sent it in, called the bank and all that.
Was it one of those Nigerian princes?
Don't know. I'm not willing to say. I don't know which country it was, but I was. Folks, be careful out there. It's dangerous. I almost got caught.
Well, just for the record, was it an elaborate scam, or did you just have one too many martinis? And
we could go either way on that.
And wanted a phone call with the people at PayPal.
Let's get ready for Barbenheimer.
Yeah, right. You got tickets for that?
I got doubled show. Watching Barbie twice.
Back to back for 5 hours. Sounds brutal. That sounds so brutal.
On the David Rubenstein Show, peer-to-peer conversations, I uncover the untold stories of the world's most successful leaders. Watch Wednesdays on Bloomberg Television.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays. Season is here.
Decent start to earnings season.
We are heading into the meat of earnings season.
Bloomberg breaks the numbers first.
We have Bank America, we have Charles Schwab.
Tesla, Netflix, you name it. They're heading in the right direction.
A record quarter of revenue.
With exclusive expert analysis.
What do they have to deliver to justify the rally we have seen?
Earnings are still going to be under pressure.
Is there a divergence that's really important to draw here?
The massive divide between Diamond and Fraser.
Bloomberg Television and Radio. The fastest numbers and analysis you trust.
In an interconnected world, disruptions in one region can have cascading economic impacts on the opposite side of the globe. So building true resilience in the United States requires bolstering resilience among our allies and partners.
Janet Yellen, the US Treasury Secretary. We've heard a lot from her this week, particularly from India, as G20 finance ministers met a little bit earlier this week. Looking elsewhere at the market right now, we are poised to squeeze out a week of gains on the S&P 500. On the S&P right now, positive by 0.2%. On the day, on the week up by a little bit more than that. In the bond market, your 10-year yield, 384.87, unchanged there on the 10-year. Yields drifting high yesterday. Downside surprise on jobless claims, the right kind of downside surprise. Amazing to see. The resilience. Janet Yellen talked about the resilience, Tom. The resilience of this labour market year to date has been phenomenal.
And we can pause here and go into that. We don't have the time to do it right now. But, John, I agree with you. This is the issue to think about into the Fed meeting and, quite frankly, into the chairman's press conference as well. He's got a dual mandate. And I'm sorry, the labor realities of his nation is overwhelming him right now.
The surprise, I think, for the chairman, based on his speech at the back end of August last year in Jackson Hole, is just how well this labour market stood up to tightening over the last 12 months, and the fact that we have got these disinflationary trends emerging. Let's see if they solidify over the next several months, Tom. But ultimately, you've got inflation coming back down towards target. Let's hope they get there without doing too much damage just yet to the labour market. If that can continue, that's pretty incredible.
Unspoken, the Bloomberg Financial Conditions Index buttresses up against accommodative away from what Chairman Powell would like to see at 0.41. That's a constructive number. It was actually a little bit higher earlier this morning. The good feeling out there maybe is not the pain that the Fed would like to see. Speaking of pain, it has been a difficult week in Ukraine. One of the great voices there is with Adam Posen and Olivia Blanchard at the Peterson Institute. Elena Rybakova not only has an encyclopedic understanding of her Ukraine, but double barrels it with data science from the University of Virginia. And she follows on in our tradition here to keep Pharaoh happy. We're having University of Warwick July. We have to speak to anybody we can who's got parchment from the University of Warwick. We drag Skidelsky in here on a day-by-day basis if we could get him. But Elena Rybakova with economics from Warwick is the kind of person we want to talk about.
You've got to drop the second W.
No, I'm not. I'm doing that just to aggravate you. I'm doing that. I'm just doing that. It's just if you're nice to me, I'll maybe do this.
You can do this. Yeah. Elena joins us now. Elena Rybakova. Elena, wonderful to have you with us. I want to start with this in the commodity market.
Thank you so much.
Thank you. It's an honor for us as well. In the commodity market, we're trying to figure out just how much Russian crude is still in this market. Can we start there? How much Russian oil is on this market now, globally, compared to where it was before this war?
About the same. You know, I think we had this oil price cap, which had dual objective, which I'm afraid I have to compare was having a cake and eating it too, a little bit. So we wanted to have the Russian oil on the market, but at the same time, lower Russian revenues. Well, we achieved the first objective. Russian oil is on the market. On the lowering of the revenues, that is a bit more nuanced and complicated.
Tell me why. Just give me the maths around that. Why is that so much more nuanced and complicated?
Well, we're on Bloomberg. It's economic incentives. On Russian side, about $10 per barrel for a year means a difference of about $20 billion in revenues for the companies and for the budget as well. So it's a $20 billion incentive to circumvent the oil price cap. They're putting everything they got in it to be able to do so. If we're not doing the same on our side, of course, there are difficulties. So if we think about the cap, we still have provisions of the G7 shipping and insurance services to Russia, and the limitations in it are very, very small. You know, I can put an attestation saying I have seen the contract and I promise to you it is below the cap. Imagine if we were filing taxes the same way. I have seen my income, and I promise you, it's very low.
Oh, that's what we do. Elena, you're bouncing off your work at Citigroup on Russia. You've really got an encyclopedic knowledge on this. What would be your to-do list for the allies, and particularly for the White House, to make this more strident, more forceful with Mr. Putin?
Well, if we wanted to be really ambitious, I would say we go for Iran-style escrow account, where we say everything has to go through one account, and then it will still have challenges, but at least we'll remove these complications at the stations, who is shipping where, you know, transshipment. I think that will definitely be easier. Failing that, we have to tighten the attestation regime. We have to go more seriously. We have to say you have to keep the paperwork. We do risk-based audits. And if we find that the company is still shipping Russian oil above the cap, we're not saying we slap your hand and we prevent you for 90 days. We actually put a proper fine.
I mean, Alina, I don't know the details here, but I'm going to assume you summered in Odessa as a child. What is your belief of the fragility of the Black Sea right now with wheat, with oil, with the new battles there? How fragile is the Black Sea territory this weekend?
It's absolute devastation. You know, from Ukraine, more than 90% of all shipment, including grain that we're talking about this week, went through the seas. So the 4 key ports account for 90% of Ukrainian exports. Of course, there is no infrastructure to move elsewhere. Odessa is one of the absolutely key ports. Then the dam that was recently destroyed, you know, that flushed out a lot of dirt from the ground, you know, a lot of sort of sewage, and and mines actually all went into the Black Sea. So an absolutely devastated situation, and it will take years for us to move forward. You know, 1 year of war, I think it's more than 5 years of demining.
I look at the demining, and I guess that comes to the military, and I understand your mandate's a bit off the military here, but you do follow the funding of the weapons. We're distracted in America by cluster bombs and their horror. What are you focused on is the next step to provide Ukraine with offense?
Well, I think the next step is for us to prevent Russia from getting our own equipment from Intel, Texas Instruments, also some of European companies, to assemble that into their military production and use it against Ukraine. So we recently put out a study where Ukrainian Defense Ministry disassembled more than 60 items, and it's kinzhals, and it's all kinds of military equipment that we all hope never to become experts in, but we are. So, and they found that 2/3 of the components in this equipment comes from the US headquartered companies. And what we also find that Russia continues to import. In fact, the levels of the imports are at the same as the way before the war. How does that happen? When we just heard Chairman Yellen talk, the head of Treasury Yellen talk about the sort of the friendshoring and onshoring. But unfortunately, China uses US equipment, US parts, produces that and ships it to Russia. Or we have countries on shipping, you know, saying maybe Turkey or UAE or others, buying it from the US and again shipping it to Russia. So unfortunately, on one hand, we're supporting Ukraine with everything that we've got. Unfortunately, on the other hand, Russia is getting our own equipment to use against Ukraine.
Chair Yellen, Vice Chair Yellen, TK, I confused that for years. Never mind Treasury Secretary Janet Yellen. I did the same thing.
Adam Posen's never done that in his life.
Alina Rybakova.
Adam Posen nails it every time.
Of the Peterson Institute for International Economics. Alina, thank you. Thank you for being with us. What a tricky situation, Tom, more than 12 months later.
Well, it's more than 12 months later, but I think what's so important here within all that we talked to, there's just a visceral understanding of the territory for those that grew up and live there like Alina. I mean, they've got a different focus on it. You can do all the fancy academics in a classroom in London or Washington, wherever, John. There's no substitute for the visceral understanding of your childhood.
The threats around the Black Sea, I remember when this war broke out, Tom, is something you were focused on straight off the bat, and just how compromised wheat supply, grain supply is going to be through the rest of this year.
Yeah, the wheat thing we've underplayed this week. It's probably my fault, folks. We've been focused on other issues here. But, you know, Will Kennedy, I know, and the team into the weekend are really focused on this. It is a jump condition in price. Does it go into a loaf of bread or, you know, whatever? I'm not so sure. But don't tell that to poor nations around the world. It's a huge deal.
It's going to hurt. Coming up, got a treat for you. David Rosenberg of Rosenberg Research. Looking forward to this conversation just around the corner. Equity futures on the S&P 500, positive 0.26% from New York. Good morning.
best investment advice you've ever been given by anybody?
The compound interest, the compounding of returns is an incredible miracle of business, finance, and human existence. Everything you learn is additive every day, and if you keep at it and don't quit, it's an incredible miracle. And it's not just interest. It was always said about compound interest returns, compound business returns, compound human returns. They're all very additive because you learn every day. And if you keep at it, it's very, very helpful.
In your observation of investors, what do you think is the biggest mistake that average investors make?
Selling at the wrong time.
And they sell when the prices go down?
Yes. Or yes. Not keeping, look, people have conviction, or they invest for if they invest for the right reasons, just keep at it.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
But are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
Friday morning, good morning. Going into the weekend, your market just about up on the week, up on the session. Equity futures look like this on the S&P 500, positive by 0.3%. The NASDAQ tried to bounce back, up 0.5%. Biggest one-day drop on the NASDAQ. Going back to February, off the back of the worst day of the year for Netflix. Worst day since April on Tesla. And this is Bramo right now. Just, in spirit.
It's in spirit.
In the bond market, 2-year, 10-year, 30-year, yield shifting higher across the curve in yesterday's session following a downside surprise on jobless claims going into the Federal Reserve next week, anticipating another rate hike from the Fed, 25 basis points. Is it one and done, or is there still more to come? There is a split on that, though consensus starting to coalesce around the idea that after a hike next week, they may well be done. Your 2-year, 484.79, your 10-year, 384.47. And just to round things out in the FX market, the euro on quite a streak recently, now on course for the worst week since May for the euro. The euro against the dollar through 112, had a look at 113, didn't quite get there. Now all the way back down. The euro against the dollar to 111.24. That's the price action under surveillance this morning. Former Fed Chair Ben Bernanke saying the central bank's widely expected rate hike next week will likely be its last. Speaking at a webinar organized by Fidelity Investments, Bernanke saying this: what we'll see is a very modest increase in unemployment and a slowing of the economy, but I'd be very surprised, Tom, to see a deep recession in the next year.
This is an authority on this. We've got to go to the reality that Ben Bernanke, whatever you think of him in 2008, I don't want to get into a discussion on it. He is one of our great monetary historians. He understands how this happens and how you come out of it. And the bottom line here on a recession is you need an NBER recession. We're not going to go into it now, but what we got to say is people think we're miles from a James Paterba NBER recession.
It's such an odd cycle. Yeah. Mortgage rates through 7. Well, yeah, it's a real, the home builders have rallied until recently on the S&P 500.
Pandemic.
It's bizarre.
We've never been here. As a society, we've never been here. And Bernanke and Anna Schwartz, Milton Friedman, they'd say you got to go back to the early 1920s to get the analog.
That's the Federal Reserve.
What else do you have here?
Big decisions next week. The Fed, the ECB, the BOJ as well. That's the standout in the FX market this morning. The yen weaker by as much as 1% against the US dollar. The BOJ, according to our reporting, Tom,
did Amy choose
seeing little urgent need to address the side effects of its yield curve control program. The BOJ, of course, making their decision this time next week.
We look at dollar, yen. On radio, I'd suggest to look at EUR, JPY. That's my thermometer here, John. First number I looked at this morning off the BOJ chit-chat, and we explode out strong euro, weak yen. And what's important here, on a euro-yen of a 157, anywhere near a 159, 160, further euro strength against yen, I'm sorry, things change.
Dollar-yen comfortably above 140, 141, and pushing 142 right now. I want to finish on China. Another story for us this morning, outlining a series of measures to increase car purchases, particularly for new energy vehicles. China's main economic planning body setting out 10 steps, Tom, including lower costs for electric vehicles charging and maybe extended tax breaks as well. This is all incremental stuff.
Yeah, exactly.
People are waiting for that big move, and this
they're
clearly
waiting
ain't
for
it.
some grand scheme. There isn't a grand scheme. For those that aren't up to speed on this, and